So again, if you're having a vision of around 1.5 year or 2 years, the counters looks very attractive.
Right. Well, thank you, Girish. Thank you for joining us and giving us your perspectives on the stocks that were discussed on the show today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTNT,
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform. Digital first. Virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world. from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me is Mahima Vachirani, and over the next half an hour or so, we will try to solve those stock-related queries. So do start sending them on the number that is flashing on the top of your screen. You can also call us on the landline number for your stock-related queries, as well as speaking to our guests directly as well. But it's been a good day for the markets. We've seen a 100-point uptick at the start of the trading session, and that has largely sustained through the day. So you're seeing again a 24,100, on the Nifty 50. In terms of the individual names that are doing well today, you're seeing some good gains coming across in the broader markets too. But for the Nifty 50, stocks, like Cipla up almost 4.6%. Citi had a tactical buy today, and probably that's one of the reasons why the stock's doing well. Dr. Reddy's, Infosys, Reliance, and Tech Mahindra are the other gainers for today. Asian Paints is actually down 2% and the biggest loser for the Nifty 50. So is Nestle and Titan. So FMCG pack largely under pressure today. The advanced decline ratio though is a story in itself, because you're seeing a larger move in the smaller names essentially. So the small cap index also continues to do well. While there has been some deceleration in terms of advances, was up almost 2,200 at one point of time. The broader breadth is very strong. So look at the advanced decline ratio as mentioned. Look at the mid cap and the small cap index too. The mid cap index was up 0.3% in the morning, and that continues to be so. Small cap has actually built on to its gains, up almost 0.8%. In terms of the large cap, large movers today for the BSE 500, also you're seeing stocks like NoSilk continue to do well, up almost 20% now. You're also seeing Kirloskar Pneumatic up 20%, Restaurant Asia up 8%. IDBI has climbed through the day now, so it's almost up 7.5%. And Sheela Foam, after a good quarter 4, has now yet again starting to see some moves on the upside. On the losing side though, Craftsman Automation is one that is slightly under pressure. Raised QIP worth of almost 2,000 odd crores at over 8,500 rupees per share. So maybe some money being taken off the table, but that's largely a good bread for the markets today. Let's welcome in our guest now. Vishnukant Upadhyay, AVP Research at Master Capital Services on the technical side. G. Chokalingam, founder and MD of Economics Research on the fundamental side of things. Gentlemen, both of you, thanks so much for joining in. Starting the first stock-related query now, and this one's coming in from Padma Reddy, who's writing us from Zimbabwe actually. She holds shares of VA Tech Wabag, bought at 1,380 rupees per share. So currently sitting in good profits. Asking if she should continue to hold her 200 odd shares right now. Mr. Chokalingam, valuations definitely are something to watch, but she's sitting in decent gains. Would you ask her to maybe book some profits, continue to hold the rest of the shares? Very good afternoon to you.
Yeah, good afternoon. My research view is that it's a sell on rise. because it's trading at around 34 PE, almost stock doubled in the last 1 year. So, and also if you look at the last 10, 15 years of history, both the financial performance stock price are extremely volatile. So considering all these facts, I would maintain a sell on further rise.
Okay, all right. The next one that we have is on Precall Limited. Our viewer Murthy from Vizag wants to know if this is a good time to invest into this one from the next 2 to 3 years point of view. Mr. Oaklingam, I'll stick with you again for this one. Your view?
Yeah, next 2 to 3 years one can hold, and if it declines, one can buy. In the short term, one may not be able to make money because it's already trading at around 28 PE. But definitely coming from Coimbatore, from very good management, excellent track record. In 2 to 3 years, one can make a decent return. But in short term, it may not be possible to make any significant return.
Also climbed to its highest range that it's trading today. So as a very timely question there again by a viewer. But the next question coming in now on ITC hotels. Now Gaurav from Bengaluru actually has been holding on to this counter at 170 odd. So stocks up 4.5% today, but largely been an underperformer over the last few months that is listed. Now Vishnu, I know it's a very recent listing, so not too much historical evidence, but any view that you can offer Gaurav at this point of time?
Hi, very good afternoon. So definitely not, it's a ITC hotel, but entire tourism space is doing immensely well. So I believe this, winning journey is likely to remain intact with a potential gain towards 200 and then 220 kind of level. So yes, it's a good buy. One can, go long at the current market rate with keeping its stop loss below 160.
The next one that we have is on Afcons Infra. Our viewer Satyan from Palakkad has been holding this since the IPO price. He says he can hold this from a long-term perspective of next 2 to 3 odd years. Mr. Oaklingam, any view on this one? Should he continue to hold?
Can hold in the short term. There is a possibility of another 5-10% return. So hold for short term. My recommendation.
Hold for short term. But some breaking news coming on the bottom of your screen. You had and we're showing those visuals on our RHS as well. UK Prime Minister Keir Starmer has resigned. You saw that that post coming in on Truth Social by President Donald Trump that and gave some indication to that, but the pressure continues on the current government, and you're seeing that impact currently on UK, on Keir Starmer, who's resigned. It's been a difficult time for the economy, a difficult time for what you've seen on the ECB as well. Inflation has been rising. You've also seen growth faltering, and that has led. And he's giving a speech. We'll of course get those flashes going as well. But definitely a big update that's coming in at this point of time. But we'll of course look at and get some more perspective also of what has been said at this point of time. But definitely breaking news coming in as well, because you also have to see the impact of what happens, because the India-UK FTA was expected to be signed by middle of July, by July 15. A lot of work has gone into that. But the new leader will be in place by September, is what Keir Starmer has put out. But definitely a big breaking also coming in at right now. And we'll continue to get you some more perspective from our reporters as well. But a big update coming in. But continue taking your stock related queries now. This one, it's coming, and the next one that's coming in now, it's on SCI. Our viewer Raja from Chennai is holding shares at around 215 odd rupees, asking if it's a good time to book profits on this one. Vishnu, would you recommend that?
Well, definitely one can book a partial profit, but still there is a more potential to extend the gain. I believe one can, book a partial and maintain a stop loss below 284. On the higher side, I'm expecting prices to extend towards 360, 370 kind of levels in days to come.
All right, okay, so that's the view coming on Shipping Corporation of India. The next one that we have is on AU Small Finance Bank. Vijay from Chennai wants to know the short-term targets that you're seeing on the charts on this one. Vishnukant?
Yes, definitely. On the higher side, I'm expecting prices basically currently drifting up very close to, it's a very stiff horizontal resistance where multiple times we have seen prices taking, taking resistance and facing resistance. But, the way prices are behaving from the lower levels, I believe this resistance will be taken out. And on the higher side, prices are all set to extend the gain towards 1120, 1130. So one can go long and one can stay long on the count.
Got that view. But let's go across and take our first caller for today. And this is dialing in from Bengaluru. Venkatam has a stock query for us. Venkatam, very good afternoon to you. Welcome to the show. What's your query?
Very good afternoon, Puneet. And this is a query, I would like to address it to Mr. Chokalingam. I would like to have his opinion. I want to enter into good pharma stocks, which I'm not holding. I don't hold anything at present. Can you suggest two good pharma stocks which I can hold it for next 2-3 years?
Next 2 to 3 years. Got it. Well, Mr. Chokalingam, you heard the query. Venkatam doesn't have any exposure right now in the pharma space, wants to do so. Two picks that's on your radar.
Yeah, for conservative investor, I have been recommending stock like IPCA and Cipla. For risk-taking investors, we recommend FDC and Indoco Remedies. These two are small cap. I believe in 2 to 3 years they can give very attractive return. Personally, also we have invested in FDC and Indoco Remedies.
Okay, all right. So that's the view coming in on the pharma names. I think we've got Mohan waiting by, calling us from Mysore. Mohan, a very good afternoon to you. Go ahead, ask your question.
Good afternoon. I just bought 10 shares of Kirloskar Oil Engines at the rate of 1,560. Can I have these shares furthermore?
What is the time period that you're looking at, Mohan?
Somewhere 1 year.
Okay, all right. I'll take this up with Mr. Chokalingam. Mr. Chokalingam, of course, today it's locked in upper circuit on the back of, getting the 192 megawatt hyperscale data center project, which is from Hypernext, and we've seen that stock locked in upper circuit throughout the day. But considering this development, would you recommend to maybe add more for Mohan?
Considering this development, I would sell from tomorrow because it is trading at already 58 PE. So tomorrow, by any chance it opens and higher, the PE will be more than 60. It's a very attractive valuation to sell.
But Mr. Chokalingam, we've seen all these data center plays also in the power equipment space that you've seen. The gains continue to be built in because markets looking for all those names. You don't feel it's a good to continue holding if you are Mohan right now?
There is a reputational risk for me. I have to accept it. But I also say that from 93 onwards, I'm seeing thematic bull run in the small. I know people how they destroy their wealth by missing them. So it's better to be conservative, be content with the profits one makes.
Well,
so I agree. I may go wrong. It may run another 20%. That's why carefully I said from tomorrow, if it again opens higher, one can consider.
Got it. Well, Mohan, hopefully that answers your question. He's bought at 1560. Stocks trading close to 2400 now. So, Mohan, that's the advice coming from Mr. Chokalingam. But the next one coming in from Vijay from Chennai, he wants a view on AU Small Finance Bank in the short term. Vishnu, how do the charts look? Because you've seen, this consolidation at that 1,000 odd rupee level for the stock. Is there any uptick that you see on the charts now?
Definitely. Just a couple of minutes back, I have answered this query. I think the stock is currently drifting very close to its very good resistance area. But the way prices are behaving and recouping from the lower levels, I'm quite sure that the resistance area of 1060 will be taken out in a very short term. And on the higher side, I believe 1140, 1160 kind of levels will be on card.
Okay, all right. The next one that we have is from Satyan, who is writing us and again asking us about two stocks, but I'm just going to take one, Satyan. Lemon Tree is the one that I'm choosing for today. From a long-term perspective, is this a good buy, Mr. Chokalingam?
One can hold. It has corrected a lot. One can hold. It has been a growth stock. For short to medium term, I would say even buy. But for long term, medium to long term, my preference is for EIH Limited. I believe that is a great stock for medium to long term.
Got that view, Mr. Chokalingam. But let's go across to Vizag now and go across, take the caller. Mohammed is dialing for a stock query. Mohammed, very good afternoon to you. What's your query?
Good afternoon, sir. I have an amount of 2 lakhs. I want to invest in Vedanta oil and gas.
Okay.
Is it safe for long term?
And do you have any other counter of the demerged entity in your portfolio right now, or is this the first pick?
I have already account in my demat account.
No, do you have any other Vedantas? Have you bought Vedanta earlier? And if you have any other delisted entity, or is this the first pick, Mohammed?
Vedanta, already I have Vedanta, but I want to invest in Vedanta oil and gas.
Oil and gas, correct. Mr. Chokalingam, we've seen, of course, valuations for the aluminum business, be demanding in that sense. Does oil and gas, Vedanta oil essentially on your favor right now?
Certainly not. I think the original name was Kane India, then merged, demerged. That is not an issue. The issue is that crude oil prices are down 33% in the last couple of months, ever since the ceasefire talk began. And I have a view that oil price will fall further badly, which will favor India, but unlikely to favor the oil producers like Vedanta oil. So I would not buy Vedanta oil at this juncture.
We've got, I think, Mohammed, we've already taken his caller, but okay, the next one that we have is on travel food services. Our viewer, who's not given his name, is asking about travel food services, bought 25 shares at the levels of 1050. I think my producer is saying that his name is Jitain. Okay. Jitain is asking this question and he wants to know if he can continue to hold this one or not. Vishnukant, any view on the charts for TFS?
Yes, definitely. One can go long or one can hold the existing position. Recently we have seen prices, have given a breakout from the inverse head and shoulder kind of pattern, and currently it is, decisively sustaining above that breakout point. Recently we have seen good amount of volumes has been, injected in the prices. So I am quite confident that the prices are likely to, extend the gain and extend its northward journey towards a 1550 sort of level. So yes, it's a good buy. One can go long with keeping his stop loss below 1300.
Got the view, Vishnukant. But viewers as well as Mr. Chokalingam, Vishnukant, it's now time for the rapid fire round in this edition of the show. You both know the drill. Keep your answers as short as possible. The first one on Star Health. Biswajit from Kolkata is holding shares at 509. Mr. Chokalingam has been a disappointment since listing. Should he continue to hold or switch out now that it's at 579?
They'll learn even small rise.
The next one is on Kirloskar Bros. Dr. Lavanya from Eluru is holding 430 shares that she's bought it at the level of 2170. Vishnukant, your view on the charts, hold or sell?
Yes, definitely one can hold for the target of 2500.
A viewer bought shares of Gabriel India at 1098. Mr. Chokalingam, another auto anch that has done well for investors. Should she continue to hold?
Sell and rise.
Okay, NMDC 500 shares bought at the levels of 95. Continue to hold, exit. What should be the view, Vishnukant?
Continue to hold with the stop loss below 86.
Ramesh from Bengaluru is holding on to Trent. He's bought shares at 1784, so sitting on substantial gains. Mr. Chokalingam, is it a good time to book out?
Definitely yes, sell.
Imami, can I buy this from a long-term perspective? Joshi from Thiruvananthapuram is asking this question, Mr. Chokalingam.
Yeah, it seems to be an attractive valuation at this juncture to buy.
Got the next one's coming from Mahesh from Andhra Pradesh. He's holding on to Kala Mandir at 165. Should he still continue to hold, Mr. Chokalingam?
I haven't tracked this.
Anything on the charts, Vishnu?
In fact, the prices are still trading towards a 200-day exponential moving average, so one can avoid the count.
Okay, the next one is on PG Electroplast. Our viewers purchased 500 shares at the levels of 450 rupees. Wants to know if as to what should be the target for the end of 2026. Vishnukant?
Yeah, so I believe immediate hurdle lies around 630, which is broken decisively. 680, 690 will be on card.
Subramaniam is holding on to New India Assurance at 385. 385. Mr. Chokalingam is asking if he should use this rise to exit this counter.
Certainly, yes. Competition has intensified. Good to sell and rise.
Anant Raj, is this a good buy right now? Aarti from Bengaluru wants to know. Vishnukant?
Yes, for a short term, one can go long, but the potential is very limited till 596.
On Translate also, Vishnukant, a viewer, Rahul Patel from Ahmedabad is holding shares at 614. Stocks trading just a tad above 500 now. Would you recommend him to continue holding at this point of time?
Sorry, I do not have any view on this.
Okay, any view on Translate writing, Mr. Chokalingam?
Yeah, it's a good stock, quite attractive post correction to hold.
Okay, Natco Pharma is the other one. Our viewer Sai wants to know if he can continue to hold this one. He's bought at the levels of 800 and 125 shares is what he's holding. Mr. Oaklingam?
Hold.
Aegis Logistics is the other counter that Kumud Sethi from Dehradun wants to know. Mr. Chokalingam, stocks up almost 40%, 50% in the last 1 month. Should he still look at buying this counter now or wait for any decline?
Extraordinary risk-taking investors can buy at this price.
Kane's Tech, is this a good time to buy, Vishnukant, on the charts?
Yes, definitely one can go long.
Venkat from Hyderabad bought into signed at 1620. Mr. Chokalingam, what should he do with this counter now?
We are very, very optimistic on the stock. I believe.
Would you recommend him to buy this dip? He's down 50%.
Yes, it's a good to buy at this price. That's our view.
Indian Hotels, 1 year view, and what's the target price, Vishnukant?
Okay, Indian Hotels. Well, definitely, I believe on the higher side, prices has potential to reach towards 780 sort of levels. So one can go long for the target of 780, 800 sort.
All right, okay. That brings us to the end of this rapid fire round. Vishnukant and Mr. Oaklingam, thank you so much for taking out the time and helping us answer all those stock-related questions. Viewers, completely out of time on this edition of Ask Profit, but do stay tuned because India Market Close is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform. Digital first. Virality.
Without a hook, no way. The message is clear. It's 2026. You got to be real in a world of reels. You got to be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Welcome, you're watching India Market Close, and it's turning out to be a pretty decent afternoon. We've held up for most of the day, Alex, off the highs, but above the 24,100 mark pretty well, and the advanced decline ratio seems robust.
It does, in fact, and that's exactly the point. The broader market's holding out as well. We've had 6 days of gains for the broader markets, and we're heading towards the 7th day of gains. So it's looking pretty good, about 0.4%, and not too far away from the high point of the day, which hit. And the small cap index, as has been the case, Tamanna, for the last 5 or 6 sessions, has been strength throughout.
Yeah, completely. Let's pull up the Nifty heat map if we can, and just take a look at what's been working through the day. I mean, Cipla has been the star of the show, isn't it? After that Citi note coming in and enumerating a number of reasons why Cipla is looking like a strong take. Reliance Industry is up about 2%, and that strength really pulling up the index. And if you pull up the contribution charts, you'll see that Asian Paints, Titan, Nestle, a bit of a muted kind of a move on the consumption basket, or some of those stocks, even a Trent ITC not doing too well. But relatively, it's pharma, tech, and of course, a heavyweight like Reliance, which is holding up. Pull up the contributors,
as
please.
Well as HDFC Bank. You'll see that
HDFC Bank as well. You're absolutely right.
And ICICI Bank about 0.5% or so. So the private banks are looking good. HDFC Bank in particular with gains of about 1%. It's these two heavyweights, Tamanna, that have not come to the forefront in the last several sessions. And if both of these are firing, then you can bet your bottom dollar that the Nifty 50 is going to be okay.
But you know what the good part about today's trade is? It's not just the Nifty. Pull up the advanced decline ratio, and you'll see that line graph through the day. It's been fairly strong.
Sure.
It's continued to be strong. I don't know if you'll see a last hour pop you might, but otherwise it's been robust. Pull up the sectoral heat map and you'll see IT right up there. IT is having a good day today. Nifty Media doing well, Nifty IT, pharmaceutical stocks in focus, oil and gas, because after the first round of talks that took place in Switzerland between US and Iran, Brent is calm. It's, all of that fear that both sides have walked off, etc. That's not happening. It's FMCG, consumer durables and consumption, which is not really joining the party. But really, on a day like today, it's okay if they're left out.
It is, absolutely. And I think it's important to note some of these notes that have come through in oil marketing companies. For example, I think JP Morgan wrote about them. They weighed in. As long as you have crude oil that holds out at this level, you'll have more people believe that maybe the worst is over on the input cost side, right? And then the outlook is how quickly will that price be passed on, because then you start having conversations about volumes again and various other aspects heading into the second quarter.
True, all of the rate hikes, which fuel hikes at the pump, have not been rolled back yet. So that's at least some buffer for oil and gas companies. Well, what else is happening? The Nifty has been range bound for the last 3 hours of trade. 24,150 to 24,160 acts as the resistance level. 24,100 acts as a strong support. So bullish sentiments in broader market are also being seen. Short covering seen in IT. Select consumption names are seeing a sell-off. So for the Nifty especially, sustaining above 24,150 can drive the index towards 24,400 or even 24,500. For the Bank Nifty, immediate supports at 57,720, 57,520, immediate resistance at 57,900 and 58,000. A break above 58,100 to 58,200 can trigger a rally towards 58,600 to 59,000. But let's go across to Avinash Gorakshakar joining us this afternoon. He's founder and head research Avinash Mentor Services, and Himen Kapari of DR Choksi FinServ also joining in. Welcome to both of you. Himen, I'm going to start with you first about where you're seeing the Nifty going if we hold above 24,100 like we seem to be right now.
Very good afternoon, Tamanna. Thank you for having me on the show. It's always a pleasure. Like you mentioned, I think if we sustain about 24,150, 24,344 is within striking distance. And dare I say above that, 24,482. One needs to be slightly, I won't say cautious, but reticent that we're sitting on top of 1,100 points. So everything is hunky-dory. The VIX has come to below 13, which is great for bulls. Everything seems fine. Laws of gravity need to catch up sometime. Couple of bullish gaps, which will not remain open for too long. But as of now, the level that I mentioned and for some more upside is definitely on the path.
Okay. What about the Nifty Bank? Because if I look at the last few sessions, there's been a relative underperformance. Not too much, but for example, last week, if the Nifty 50 gained about 1.65%, Himen, the Nifty Bank gaining about 1.5%. So what are the levels that you're looking at for the Nifty Bank?
Alex, last few weeks, 4 to 5 weeks, it's moved up by 5,000 points. That's pretty much. In terms of levels, 57,364 now needs to hold a support. As long as we're above that, everything is hunky-dory. We close above 58, we give another 700 points on the upside to 58,712. Like you mentioned, the small hiatus that the Nifty Bank is undergoing, it's consolidating, moving sideways. But if you look at the relative strength, Alex, a few bullish gaps, normally I would tell you that yes, they need to get covered up. But the stock has consolidated by posting a higher top, higher bottom in the small range. So relative strength above 58, we see more upside coming in, Alex.
Stocks that you're liking, Himen, based on the charts?
Okay. Frankly speaking, it's like microwave popcorn. There are a few stocks popping every half an hour or so. But stocks which are looking good. Firstly, I have a buy call on Supreme Industries, Alex, looking good. Oversold, downside limited, has formed the base. Oscillators turning positive. I believe it should close over the 55-day exponential moving average, if not today, tomorrow. So buy at Supreme at 35.60. Stop loss 35.10. Target of 36.60. I believe we should be heading even higher towards 3800. Second stock is Astral Limited. Logic is almost the same, but the difference is this has closed up on the 55-day EMA and the 55-week EMA. So higher tops, higher bottom. Once again, oscillators looking good, positive divergence. Everything seems it's ticking all technical boxes, Alex, for a move. So one can buy Astral at 1560, stop loss 1520, target of 1640, Alex.
Microwave popcorn, huh, Heyman? You're making me hungry, and I've eaten my lunch already. Avinash, are you in the mood for some microwave popcorn? Every so often you have a few stocks popping. What are you looking for in the market as things stand right now?
No, I think Alex, as Heyman has said, I think the markets have now turned cheerful. I think at least the geopolitical situation has improved. So, things have actually improved. So definitely you're going to see a lot of activity in both the large caps as well as in the mid cap category. In fact, the broader market, offers a bigger opportunity. And specifically, we are positive on the hospital as well as the hospitality space and the auto component space, because we feel that these are stocks where definitely you could see a good traction. I think within the large cap auto space, we still believe that stocks like Ashok Leyland, Mahindra and Mahindra look pretty decent and attractive to even enter at these levels. And in the hospitality space, I think Chalet Hotels, Lemon Tree, these are smaller companies but which are growing very rapidly. So I think, wherever the theme is more of domestic theme, I think the markets are definitely looking at them positively. And with crude prices down across sectors, you're going to see raw material prices correcting at least from the quarter 2 onwards. Quarter 1 may not be all that good, but quarter 2 is something which most of the analysts and market people would definitely hear out from the commentaries from the management once the Q1 numbers are out. So I think, the mood is pretty good. I think SIP flows are also coming pretty strongly. And I think going forward, hopefully, once the geopolitical situation is finally corrected, you could see even the FIs looking at India again in a positive stance, because valuations have corrected sharply. So they cannot ignore India for a very long time. So money will come, but I think you need to have the patience to hang on for a long period.
Okay, just talking a bit about what's happening in European markets and the announcement there of Keir Starmer now stepping down as Prime Minister. This was widely expected and has happened now. So you're seeing no major movement in European markets across the board now. But, Alex, this would be the 4th British Prime Minister in 5 years for the UK. So tumultuous politics in that announcement coming in a short while ago.
Yeah, and it's also, I think, reflected in the bond yields that you're seeing in the UK, because that it prices in that kind of risk. So if they're at a 30-year high, or the highest in this century at least, on the long bonds, then that just tells you something about the state of that economy and the questions that investors are asking.
Yeah, I mean, it's also reflective of what is
geopolitics and all of that.
Not so much geopolitics, but UK
not in
politics.
the UK. I'm saying the war in Iran has a bearing on import, has a bearing on various other things. So it is reflected in the bond yields as well.
Oh, you're talking about the bond yields.
Yeah. No, but that uncertainty of politics in the UK is also a factor that plays in.
For the bond deals.
100%.
I'm speaking about what's happening in the UK and for their economy as well, and how much sometimes we don't account for political stability as a factor of how a country performs. All right, let's talk a bit about India, and the stock of the day is Kirloskar Oil. It's hit an upper circuit after a strong data center order from Hypernext. This win marks its entry into a high growth segment and signals rising competition for some others, including Cummins. Parth joining in for more on the stock of the day. Parth, first of all, tell us about this deal with Hypernext.
Sure. So first of all, it's a really big day for the investors of Kirloskar Oil Industries. The stock has gained 20% today. Since morning, it has been logged in the upper circuit. And this is not a one-day thing. In fact, in the last 1 month, the stock has gained 40%. In the last 3 months, the stock has gained 75%. So a huge momentum is what we have seen in this counter in the recent times as well. Now, moving on to the reason why it has hit an upper circuit today is because they have won a 192 megawatt hyperscale data center genset order from Hypernext. Now, genset is basically a smaller term for generator sets. They provide critical power backup ability for data centers, and this order includes the supply of 96 units with 2500 kilovolt ampere systems. Now, this is a positive for Kirloskar Oil Industries because it marks their entry into the hyperscale data center segment. Before this, only Cummins was the leader in this segment. India's because data center capacity is expected to rise very sharply with additions of up to 6 gigawatts by FY30. Axis states that this opportunity alone is worth 15,000 crores, and Kirloskar Oil was planning beforehand for this opportunity as well. They have already set up a capex of 1400 crores to disrupt this industry. Now, if we talk about valuations, then Kirloskar is currently trading at a premium. Their 5-year average PE stands at 40.7 times versus the current of almost 60 times. On a 1-year forward basis, the stock trades at 49.2 times its PE ratio. If we talk about their brokerage view as well, JM Financial has said that the valuation discount versus Cummins should narrow on right now, because majorly investors were focusing on Cummins to play this kind of themes, but with the entry of Kirloskar, that gap should narrow between the two companies. Also, the reduced technology gap will trigger a re-rating for Kirloskar, and that's what we have seen in today's move as well. Now, moving on to the other side of the coin, why this is a loss for Cummins? Well, Cummins held an 80% market share in this segment before the entry of Kirloskar Oil Industries. That's almost a kind of monopoly in the business, which now Kirloskar is entering into. And this shows that customers are considering alternatives. They are not purely dependent on Cummins. They are looking for other players as well. Now, Kirloskar offers the gensets up to 3000 kilowatt ampere capacity, and this also was majorly in the park of Cummins, but now Kirloskar is another player as well. And as I said, that this is reducing the gap between the two companies, and that's what is triggering the re-rating for the stock.
Got it. All right. Thanks so much for that. That's the stock of the day, by the way. Kirloskar Oil at the upper circuit right now. Avinash, you heard the entire conversation, or rather the presentation that my colleague Parth has shared. And he's speaking about Cummins in the entire data center space as well. What do you make of this? And what's your view on this pair of stocks?
No, I think, Alex, Kirloskar Oil moving up, significantly is largely because of the data center theme. I think this is the first kind of order. Many more orders are expected, and the management commentary post the Q4 numbers was very strong. In fact, numbers have been very strong. They're sitting on a lot of orders, so all that would get completely, commissioned in the current financial year. So our sense is that, anybody who wants to take a kind of investment call here should wait for some time. I think it's better that, even if one buys here, it should be bought in a staggered manner, because the stock today is up by almost 20-odd%. So, the good news has got reflected in the price. But I think to get a better alpha, I think one needs to, wait for a mild correction and then enter the stock. Definitely, the story seems very strong. Data center is a very big theme, and the company will benefit. But it's better that the investor looks at buying the stock at slightly lower levels. That would give him a better margin of safety.
Hey, what's the possibility of those lower levels coming up imminently? And what levels specifically on the charts would you look for? At this moment, there are no sellers in the stock.
Alex, 6 years. It's moved from 76 to current levels. Frankly speaking, the laws of gravity or technical don't apply to something like this. We're at all-time highs. We don't have any known resistance levels. So it's a clear blue sky, so to speak. But I think I totally agree with what Avinash says. If it's gone up 20% today and it's gone from 1800 to 2400 in the last 6 trading sessions, I'd stop, wait a bit, take a breather, wait for it to come off a bit, because I'm not sure if you were going to take this from a trading point of view, the stop loss would be too deep to have a favorable risk-reward ratio, and it's just been simply crazy. It's been, off the chart. So I'd say wait a bit, but I don't see any negativity, overbought situation yet. But yes, this huge gap that we've seen today, Alex, out of 10 times, 8 times, indices and stocks tend to cover it up. So I'll wait a bit.
The laws of gravity that you're talking about is quite something, from 76 rupees to 2,389 rupees in a gap of 6 years. Everything in that pack is up, right? Kirloskar Brothers, Kirloskar Ferrous, all group companies actually all zooming today in trade as well. So nothing like Kirloskar Oil itself. But let's go across now to Somit Sarkar, joining in with all the chatter from the dealing room this afternoon. Somit, what's on your radar?
A host of stocks that remain in focus. Firstly, it's the couple of food delivery and quick commerce company, Zomato and Swiggy. There are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating this counter at lower levels in trade, and delivery volumes are expected to be on the higher side for both the names. For Sansera Engineering, there are buy flows on the large HNI desk. Dealers are expecting strong commentary to come in from the upcoming plant visit of Sansera Engineering. When it comes to AB Capital, there are buy flows on DI desk. Delivery volumes are expected to be on the higher side. For Craftsman Auto and Lenskart, there are sell flows on the PMS desk. Dealers are expecting block deal in both the counters very soon. So keep an eye out for both the names. And lastly, when it comes to Jindal Steel and Steel Authority of India, that is SAIL, there are multiple dealing rooms that are recommending sell call to their clients, dealers are indicating that there is a sharp fall that they have seen in the rebar steel prices in the month of June. From around 56,000 rupees per ton, it has come down to nearly 52,000 rupees per ton, and that is the one reason why multiple dealing rooms are recommending sell calls to their clients.
Interesting, particularly on the steel names. Thanks so much, Sumit, for that. The rebar prices are seeing drops. Avinash, ultimately the commodity players are going through that bit of tizzy, right? Because just a short while back, you had aluminium prices come off very sharply. That was reflected in the prices of Hindalco as well as Nalco. And now Sumit pointing out that steel rebar prices are coming off. So what would you do with the metal pack as a whole? If you managed to get it early, would you take money off the table, or would you wait for the first quarter results to come through?
No, Alex, I think I would prefer to wait for the Q1 numbers, because still inherently metal prices are significantly up. And I think this price correction which has happened, I think we need to get a little more confirmation, although it's good news for the aluminum user segment, because, aluminum prices had never risen so sharply in such a short period of time. So, it gives them a relief. But for primary producers of aluminum, I think if the price is correct, I don't think it's going to be a significant dent to their profitability, because volume growth has been pretty good. The throughput has been good from user sector. So I would say that it's better to wait for Q1 numbers and then take a call on steel as well as, ferrous as well as non-ferrous kind of metals. After that, we could get a significant assessment as to how demand is actually shaping up, whether global prices are going to be turning further lower. So that would be a good time to reevaluate.
Okay, let's stay with newsmakers this afternoon, and the MSCI review may see around a $3.2 billion set of inflows. Laurus Labs and Biocon likely upgrades as well. Ather Energy and SAIL could be fresh inclusions. Sumit Sarkar with us, joining in with more details. Sumit.
Yes, there are early estimates that have come in related to the MSCI REGIC that will be announced on August 12. Now, as per JM Financial, Laurus Labs and Biocon have the highest probability of moving into the MSCI Standard Index from the MSCI Small Cap Index, and because of that, both these counters are expected to see a high amount of inflows. For Laurus Labs specifically, JM Financial is expecting inflows of close to $496 million, while for Biocon, the inflows are expected to be close to $295 million. When it comes to Apar Industries and Uno Mindia, there's a medium probability of these two counters moving to standard index from the small cap index. Inflows could be anywhere between $200 to $260 million. And when it comes to Ather Energy and SAIL, again there is a medium probability of both these counters seeing a fresh inclusion into the standard index. And if that happens, the inflows could be anywhere between $188 to $209 million. Apart from that, there is Coforge, Max Financial, Glenmark Pharma, Thermax, Lenskart and Schaeffler India. All these counters have a low probability of either getting included in the standard index or moving from the small cap index to the standard index. And if that happens, then inflows could be anywhere between $157 to $500 million. But do remember, these counters have a very low probability at this moment, and these are quite early estimates. But overall, analysts are expecting inflows of close to $3.2 billion because of the MSCI REGIC that will be happening in August.
Okay, thank you for that, Sumit. I want to just look at a whole pack of defense stocks. So news coming in that there is talks about India supplying the BrahMos to the UAE, and there talks about a BrahMos deal with Vietnam as well. So now look at some of the stocks. You're seeing a lot of those defense stocks up right now, but whether it's Bharat Dynamic, Bharat Electronics, HAL, Data Patterns. Let's look at some of those as well. Solar Industries, Paras, Good Luck India, already Good Luck India in focus today. Premier Explosives, some of those also popping. Good Luck India anyway had a deal announcement and that stock about 4.5% up. Avinash, any of the defense play that you like, and especially Good Luck India?
No, I think Good Luck India definitely looks promising because they got a 250 crore order for their subsidiary Good Luck Aerospace. And I think this is going to be a very prominent order because, they are one of the few players which makes these artillery shells. I think clearly the traction in the business has increased. Clearly the company makes a product which is in heavy demand, not only from domestic customers, but even overseas inquiries have been coming in. Apart from that, I think the other defense companies could be Bharat Electronics or maybe an HAL, where I think the order book is very strong. Scalability over the next 1 or 2 years looks quite promising. I think BEL looks very promising. I think probably somebody who's got a 12 to 15 month kind of time frame can actually buy it at the current level. So currently, yes, defense looks interesting, but I think you need to give in at least 3-4 quarters because this is not a quarterly kind of run rate business. Sometimes numbers don't come as per our expectations on a quarter to quarter level. So next 12 to 15 months outlook for these companies definitely appears to be quite good.
Specifically on the BrahMos, because as I understand it, Avinash, Solar Industries is a key player in that ecosystem. The only point is the stock is up quite considerably. Just over the last 6 months, it's up as much as 45%. The stock is spiking in trade today, but take a look at that. 6 months, 45%. In fact, a similar gain over the last 3 months itself. It's trading at close to 100 times price to earnings on a trailing basis. Is it too steep right now to enter, Avinash?
I think, Alex, if you got a 2-year view, I think you can still look at buying this. This has been one of those stocks which is a monopoly stock, and where, I think the customer centricity and the kind of products they make is quite unique. They are present not only in BrahMos, basically, but also they make explosives, which are, given to Coal India and many other coal fields. So clearly, I think the numbers seem to be very strong. They have a very large order book. That definitely makes them very, very strong in the domestic market. And I think it's very clear that no other player is as close to Solar Industries. In fact, Alex, just to tell you, there is one company which supplies aluminum powder to this company, that is Solar Industry, which is an indirect play on solar. The company's name is MMP Industries. I think very strong numbers, very, very strong kind of cash flows, but I think a completely ignored stock. So I think, somebody who wants to actually play on Solar Industries can even look at MMP Industries because Solar Industries is a very large customer for MMP, and actually its track record in the last 3 to 4 years has been quite commendable.
Okay. On to an exclusive news update. Sources are telling NDTV Profit that 10 to 12 vessels carrying fertilizer stranded near the Strait of Hormuz have resumed their journey to India. This is crucial. You're seeing an impact on fertilizer stocks today as well. But Rishabh joining on with more details. Rishabh.
Absolutely, Hiral. What we're picking up from top official sources is the fact that there are a bunch of vessels, roughly 10 to 12, that were earlier stranded near the Strait of Hormuz due to the obvious tensions that are around that area. There's the constant open and shut of that very narrow, very important for commerce Strait of Hormuz. So roughly 10 to 12 of those vessels, which are a combination of Indian flagged as well as foreign flagged vessels, but all of their destination is India, is what we're picking up. All of them are now on their way to India. They're expected to arrive over the next 2 or 3 days. I also checked almost all fertilizer stocks were up and have been up for a bit. What we have also is the details of these 10 to 12 vessels. Now, roughly 8 of them are set to carry urea-based fertilizers. India is the largest consumer of those urea-based fertilizers, and roughly 4 of them are carrying DAP or related raw materials. So that's the breakdown that we have at this point in time in terms of what is entering into India. Now, remember why stocks are up is, of course, because India is the largest importer of fertilizers. The incoming Kharif season is going to be extremely important for the agriculture-based economy here in India. That is sort of what lifts up everything in terms of sentiment as well. And that's what we're picking up in terms of the sort of fertilizer stock that is set to come into India after the sort of tensions that we've seen weighing down on the entire petrochemical chain. So this is a relief for almost everyone in the sector. All farmers should be sort of happy. The government has also been able to procure these fertilizers so far, and that seems to be continuing with these vessels coming in.
Right, Rishabh, thanks so much for getting us those details. Now, two aspects, of course, playing through for the fertilizer space here in India. One is the supplies, which we've just spoken about. The other side is the demand side, right, Avinash? Because ultimately we've had a late onset of the southeast monsoon winds, and you have a situation where there could be a deficient monsoon. What do you think about the demand side of the picture?
No, I think, Alex, clearly, from whatever reports I have read, I think the deficit is almost 50 to 60%. So I think this time we need to cover up, for the slow progress of the monsoon. And I think if this monsoon progress does not happen, then it's going to have a significant impact on the agrochemicals as well as on the fertilizer company. So I think, it's better that we wait for the first quarter numbers, because April to June is unlikely to be a great period for most of the agrochemical companies. But fortunately or unfortunately, April to September is the peak period for agriculture inputs like agrochemicals, fertilizers. The second half is slightly more tepid. So, if the first half is lost, then I think to a large extent, fertilizer companies, agrochemical companies are going to underperform. So I think it's better to hold rather than, buying at these levels. I think the Q1 is not going to be great, at least as of now.
Okay, we're going to take a very short break, but before we thank Avinash and Hemen, I want you to give us a couple of ideas with the assumption that markets are going to continue on this strong wicket. What is on your radar for tomorrow's trade? You're on mute, Hemen.
Sorry, my bad. I think for tomorrow's trade, I think high risk, not high risk, but a dark horse would be something in the IT sector. I believe that is bottoming out despite whatever happened to Accenture last week. And I have a feeling even something like, defense has moved. So cement can be something which one can play with. Not much for lows. A bounce is just on the verge on the anvil.
Got it. Okay. So a name in the IT space as well as in the cement space. On that note, gentlemen, thanks so much for taking the time. Speak to you really soon. But we slip into a very quick break. We'll get you more strategies heading into the end of trade and, of course, ahead of tomorrow. And the question really is, do we continue to see strength in the Indian equity market? Stay tuned to find out.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
welcome back. Looks like we'll close strong and steady as we have been all day. Markets have been on a good wicket, about 0.5% up now. So staying above the 24,100 mark. And that's really the important levels to watch out for. What's buzzing in the last few hours, or actually the last hour or so? IT stocks have been doing well. Pharma is doing well. Defense has gotten a pop after news that the BrahMos might be, now India might close a deal with the UAE on the BrahMos, and other countries are also being spoken to. So you have the entire defense sector and that index also up and about. Well, let me welcome now on the show Osho Krishan, Chief Manager, Technical and Derivative Research at Angel One. Also joined by Siddharth Khemka, Head of Research Wealth Management at Motilal Oswal Financial Services. Welcome to both of you. Osho, just how defensible is 24,100 looking like right now?
Very good afternoon, Tamanna, and all the panelist members. Well, yes, no doubt today we have seen a positive traction, but again, on the higher end, there has been very strong stagnation. There is no major follow-up movement, specifically in the benchmark index. It has been a range-bound movement for the index, and the hurdle of 100 exponential moving average is still persisting and providing strong rejections at the higher zone. So no doubt 24,100 being the maximum pain also. So I'm expecting that this zone can be seen as a very strong and crucial juncture. But again, the view remains buy on dip. 24,000 is the support zone. So better to look for buying opportunity on the dips. On the higher end, we have resistance zone very nearby. Firstly is 24,150, 160 on the spot levels, followed by 250. So I'm not very much strongly bullish in the Nifty 50 index as of now. But again, tomorrow, if there will be any kind of follow-up movement above 24,160, then we can see a decisive up move in the coming period. But as of now, I'm expecting 24,100 to be a very strong magnetic zone for Nifty.
Magnetic zone, interesting. Osho, quickly, individual stocks that you're liking at this point? Potentially also short-term trades.
First one is PFC. PFC has given a very strong breakout in today's trading session. The counter is already 2.5% higher. That has been backed by volumes. So I'm expecting that in the coming period, there might be strong possibility for the counter to retest the zone of 458 to 460. So this will be my first bullish bet with a strict stop loss of 428. The other counter, which is looking very positive, is Tata Communication. This counter has given a very strong flat pattern breakout in today's trading session, and I'm expecting with the kind of momentum this counter is into, there is a strong possibility of a strong momentum coming in the recent period. So Tata Communication, one can look for buying opportunity at current levels, 2060. 1980 is the estimated stop loss that one should keep. And on the higher end, 2150 followed by 2180 is the immediate target for this counter.
Okay, Siddharth Khemka also joining in. Siddharth, this afternoon, are you feeling bullish on IT? Or do you think this is something that can see another seesaw over the next few sessions?
Yeah, hi, good afternoon. I think, Tamanna, if you look at our overall view on IT, remains a bit cautious, albeit what we are seeing is that there is some value buying which is helping the sector right now. But if you go back just last week itself, Accenture with its lower guidance that had impacted the sector. So what we believe is that in the near term, the pain and the deceleration because of AI, that will continue and could impact Q1, Q2 numbers. So we are seeing very soft outlook, at least in the near term. In the long term, there would be some companies which will emerge as beneficiaries from the AI adoption, plus the margin savings, which are right now getting kind of consumed because of the pricing pressure. Selectively, some mid caps which are showing kind of strong growth in the business, something like a Coforge, which has consistently seeing strong order inflows, plus now valuations being comfortable. But overall, we would remain underweight on IT.
You know, as much as IT has been a theme that has spiraled downwards, there are other themes that have worked pretty well, and the broader energy space has been something to watch here in India. Power stocks have rallied sharply, but even in that pack, there's one stock that has not done well, which is NTPC, at least relatively speaking. What are the reasons for that underperformance? Varsha has a few
to tell you about. And Varsha, what are you picking up?
Well, on that note, NTPC has actually seen a decline of 2% in the last 3 months, whereas if you see all the power stocks have seen a sharp rally in the last 3 months. Let's see what are the key reasons why investors are questioning that what is the reason behind lag that we have seen in NTPC. Let's see, if you see the BSE Power Index is up almost 20% in trade. Adani Green, BHEL, Adani Power, Hitachi Energy, Thermax and Suzlon all are up ranging from 30 to 50%, except NTPC, which has seen a downward rally, I would say, of almost 2% in the last 3 months. Let's see what are the key reasons. Reason number one is, of course, the management uncertainty, wherein Gurdeep Singh is seen as a key to execution and policy influence, but his term has been ending in July 2026, so no clarity on extension, number one. Number two, the fundraising. If you see, many power companies are actually raising equity after energy security focus has been increased, which includes your NHPC, Coal India, JSW Energy, ACME, which have raised equity, and NTPC is used by FIIs to it's an easiest stock to sell, and hence we are seeing a lot of selling pressure when it comes to this counter. Reason number three is, of course, if you see, the power sector had seen a strong rally due to summer demand, energy crisis and data push, which has aided sector. Now some rotation is being seen as these triggers may ease, and hence investors are shifting their money to other sectors or cheaper stocks, and NTPC hence has taken a biggest hit over here. Reason number four, of course, the competition. Earlier states used to prefer NTPC for thermal power, but now states are tendering new coal plants like Adani Power, JSW Energy are gaining strong share, and NTPC is, of course, losing market share for some of these new projects. Last reason is, of course, there are no near-term triggers, no big capacity addition is seen in the next 2 to 3 years, and of course there's no immediate catalyst to drive stock upside. So these are 5 key reasons why NTPC has lagged. But no, long-term story, if I were to talk about, still intact, because it's one of the largest players in thermal pipeline, then part of total 76 gigawatt pipeline, still leading player, and the stock is seen reasonably valued as versus global and Indian peers. Just to give a context on valuation, NTPC is trading at around 13x, while if you see JSW Energy, ACME and NHPC has kind of premium valuation over here. Lastly, on to the analyst recommendation, where there are 26 analysts recommending buy, 1 hold and 1 sell with an upside potential of 20%. So overall, we have seen 5 key reasons why NTPC has lagged, but yes, long-term story remains intact.
If it diversifies beyond just thermal power and moves into nuclear as well, certainly something to watch out for. Siddharth, what's the opinion? And I think Varsha highlighted the reasons why the stock has lagged quite well. Do you agree with them? And what do you think about the prospects?
So definitely, I think a lot of things going in favor for NTPC, like the power demand, which has spiked up. NTPC green energy generation grew almost more than 100% in FY26. However, at the same time, a lot of concerns are there, key monitorables that we believe. For example, the coal PLF has come down to 72% from 77% in FY26. The management has lowered the thermal capacity addition targets for FY27 and 28. So for FY27, from about 1600 megawatt addition, they are now targeting about 1070 odd. So that clearly shows there is some execution risk plus slower growth going forward in terms of capacity addition. So right now we have a neutral rating on NTPC, but looking at the correction, I think there is some room for improvement here given the long-term structure, plus valuations have become very comfortable. So net, while we are having a neutral rating, our target price at 390 definitely gives a 10% room for upside in NTPC.
Okay, NTPC in focus. Osho, I don't know if you have a view on NTPC on charts.
See, again, NTPC has given a breakdown from the zone of 390, and from there onwards, there has been a strong sell-off the whole month. But again, in the last 3 to 4 trading sessions, there has been a technical rebound in the counter from the 200-day simple moving average, and that too from the oversold terrain. So this is just a technical pullback. I'm expecting that on the higher end, till the time 370 does not get reclaimed, till that time we can see some kind of consolidation around the same zone, 360 on the lower end or 358 on the lower end to 372 on the higher end is the consolidation zone for NTPC in the very short term period. But if there will be any kind of bounce above 372, then there can be a bounce or there can be a continuation towards the zone of 390-95 in the coming period.
Okay, so that's the view on the charts on NTPC, but let's talk about Cipla. No confusion on Cipla at all. It's the clear top Nifty gainer in trade today. And one of the reasons is possibly what Citi's stake is. They've maintained a tactical buy on the stock. Varsha joining in for key highlights of why Citi is so bullish on Cipla, and the street seems to be agreeing, Varsha.
Yes, absolutely. 26% upside is what Citi has been highlighting, and hence they've rated buy with target price of around 1700. They have put Cipla on a 90-day positive catalyst watch, meaning next 3 months could see stock moving triggers. Now Citi is betting on 3 major launches when it comes to Cipla for their US business, and these are critical because US revenue was of course weak, and these launches can drive the US recovery in US sales. And for the India business, well, the domestic business is already doing well, and the growth has been supported by the respiratory portfolio that the Cipla has, and of course the recovery in that segment. The Indore plant US FDA re-inspection is expected anytime, and if that clears, this becomes a big positive trigger for the stock. Now geopolitical pressure is always easing, which is likely to reduce cost risk, which will support better margins going forward according to Citi. And the impact of rev limit decline is largely behind. The risk reward looks attractive, and Cipla is seen as a strong India focused play, especially when India heavy pharma peers are expensive according to Citi. So overall Citi is bullish, and next 3 months could be a good re-rating for stock.
Okay, as of yesterday, at least it had a 26% upside. Some of that has gotten taken out with today's 5% up move. Siddharth, what is the kind of potential upside that you anticipate for Cipla? And would this be one of the top picks for you in the pharmaceutical space, or would you prefer something else?
So, Alex, I think we are again, we have a neutral rating as well as a neutral view on Cipla. Q4, we saw sharp underperformance in EBITDA margins, while the North America business is yet to pick up. We expect Q1 to be again softer, and only growth in US to pick up from second half of FY27 onwards. So overall, I think there are the ongoing regulatory issues with regards to its product Lanreotide in US, plus the adverse impact of geopolitical tensions in emerging markets, the enhanced marketing and promotional spend, plus valuations little bit kind of on the higher side. So we have a neutral rating and 1400 kind of target price. Our top pick within the healthcare pharma space, I think 2 segments. One, CDMO is one space that we like, and the other is the hospitals, largely the domestic story. I think these are the 2 segments within the healthcare space that we like right now.
Okay, I think defense will possibly make it to the list. We'll ask Siddharth about it, but first let's take a look at what's been happening with defense stocks. India and UAE are in fast-moving early-stage talks for BrahMos missile and Akash Tir air defense exports as per reports. This is reflecting Abu Dhabi's push to diversify beyond US suppliers. Hiral joining in with more details. Hiral, which are the companies that have a role to play in the BrahMos system?
Thank you so much for that. This is going to be interesting because BrahMos, we are just talking about UAE right now. In fact, last week, there were media reports also indicating that the deal with Vietnam for BrahMos is something which is nearing early stages in terms of closure. So both of these aspects will be the ones which will be positive. Now, if you talk about individual counters, there are multiple components to this. If you talk about the core component and subsystem suppliers, you have names like Data Patterns, Solar Industries, Premier Explosives, as well as Good Luck India and PTC Industries. These are the ones which stand to benefit on this aspect. Apart from that, if you talk about the electronics and integration partners as well, you have names like BEL, HAL and Bharat Dynamics, the bigger names that actually come to the foray as well, who get to benefit in terms of BrahMos. And very lastly, if you have to look at the structural material and the heavy engineering providers, you have names like Paras Defense as well as Jindal Stainless. These are the names that tend to benefit out of the BrahMos deal. Now, to add to this, you have Akshatveer also, which is coming in. Now, a similar set of companies that will benefit on that deal as well. But interestingly, it's two deals that you're talking about right now, Tamanna. One is Vietnam, which was announced last week, which is nearing closure, and today you're talking about UAE as well. So I think defense stocks are set to fire on the back of the orders that could be coming in.
Okay. Thank you for that. And defense stocks are firing to some extent already. You're seeing that entire index up about 1.5%. Siddharth, is there more room to grow for some of these defense companies? Garden Reach was already in focus, for example, because of the Navratna status, and now this news as well. The fact is, I'm just going to add to this, the fact that the UAE is looking at alternatives to the US cover after everything that's happened in the Middle East also opens up export potential for private companies in the defense space in India, doesn't it?
Yeah, Taman, I think definitely defense is one space that we believe is a multi-year structural story. And while the domestic demand continues to see strong growth, what we also like is that the fact that the government has opened up the space for a lot of private players within the domestic defense procurement, which is adding to the capabilities, plus the Make in India program for the last several years that has added to the technology transfer plus manufacturing capabilities. And given this current global geopolitical scenario, I think the exports opportunities have just began to open up. And I think, again, a lot of these technologies which have been tested recently in some of the warlike situations, I think that is helping India be a big supplier to the global markets. What also helps is that geopolitically, India is kind of in a neutral state. There are a lot of friendly countries to whom we can supply these equipment. So I think, again, defense system is witnessing a strong momentum. FY26, the defense procurement in India reached a record 1.78 lakh crore. And going forward, the defense exports also for last year saw record sales. So I think this is a space which one needs to look at from the next 4 to 5 year perspective. It's a structurally long-term story. Stocks that we like, Bharat Electronics is the market leader there. Bharat Forge is emerging a big way in the defense segment, and it's the key growth area for Bharat Forge there. Some of the other companies like Data Patterns, Astra Microwave, I think this is a basket that we continue to like a lot.
Okay, interesting. We started off with Voltas as a stock, and I'm shifting gears now to talk about Voltas. We started off with gains of about 4%. It's cooled off from that point. In fact, trading at close to the low point of the day. But there's good reason for interest in this particular counter because they've highlighted that they crossed the 1 million mark in the first quarter in 81 days compared with 88 days in the year ago period, and that just showcases what the summer has done, this extended summer. It's good news though for EPAC Durable, which is a supplier to Voltas that's seeing strong demand. But what are the prospects looking like for this particular counter? We've got both a bull view as well as a bear view. Let me bring in Puneet to give you both the bull and bear scenarios. Puneet?
Well, thank you for that. As you rightly mentioned, the Voltas is a key trigger for this counter. Almost 1 million units sold in the 81 days, as you mentioned. But, for EPAC Durables, 20 to 30% sales comes from Voltas. So any direct beneficiary to Voltas in terms of sales growth is clearly visible to EPAC Durables numbers as well. For FY26, though, it was a very weak year for the company. Profits fell 94%. That was led by reversal of PLI income for FY26 because they failed to meet the revenue targets, and hence it was a washout year for EPAC Durable. You saw the stock collapse post Q4 earnings as well. And as I mentioned, 20 to 30% volumes from one single customer, that's Voltas, that's the largest AC maker in the country. And hence, you're seeing that reaction more on EPAC numbers and on the stock price compared to Voltas right now. Raw material prices, though, continue to be volatile in this particular time frame, and hence, despite the growth in volumes, how does that translate to margins will be something to watch for EPAC Durable in Q1 FY27. When you also look at what the management expects, they had guided for a 15 to 20% growth in this quarter before when they last spoke to us as well, and hence the growth momentum was visible at that time in the middle of May. That should translate into numbers hopefully for its shareholders as well. But the overall utilization as well as asset turns were very weak at the end of Q4. So management has guided for going back to those higher levels in terms of utilization as well as asset turn. How much of that materializes will depend on Q1 and Q4 AC season as well. And finally, what we've seen as Hisense as a key manufacturing plant they've set up that has come on stream in the month of March end. Those will be an additional kicker to numbers in FY27, which wasn't visible last year. But brokerages, are seeing, the EPS impact of the company because FY26 was a washout. But FY27 also, brokerages like ICICI still see that EPS won't be touching FY25 levels as well. So while today is, of course, given a good stock reaction, you have to look at the performance in the next 1 to 2 quarters because the last 3 to 4 quarters have been a clear disappointment for the company.
Okay, this time though, something seems to have switched. EPAC Durables in focus. Siddharth Khemka, this whole room air conditioner story, and you're seeing Voltas, LG, Blue Star, all of them will be in focus. Of course, the pick and shovels, the back end of it also, which is why you're seeing EPAC Durables also racing today. Do you think there's more legs to this story?
So, Tamanna, I think definitely there are. So again, you have to look at it in 2 parts. A, the short-term view, because these are seasonal driven sector, and with the extended monsoon, they've got a leg up, which could see a good numbers in Q1, and hence I think there is little more room for upside. But again, from a long-term perspective, this is again a sector which we believe will do well with the global warming and the irritant weather, which is kind of increasing the demand for room ACs. On its part, I think Q4 numbers were pretty weak for Voltas itself, and margin pressure for the industry because of the raw material prices. And I think with the strong demand now, the industry will be able to take on the price hikes to mitigate that margin risk. And hence, I think in the near term, there is definitely some room for upside. After that, again, with the advent of monsoon, maybe we can see some profit booking. And again, around the Q3 season, when again the October heat kind of situation starts, is a good time to start accumulating these kind of stocks again.
Got it. Okay. Anything on the charts, Osho, for EPAC Durable? It's certainly come off the high point of the day, but it's still trading with gains about 9%.
See, overall, this is the first day where we are witnessing a very strong volume-based buying in the counter, and historically, there has been a follow-up movement in the counter, especially after such kind of volume-based movement. So I'm expecting that in the coming day, there might be a higher possibility of this counter to test the zone of nearly 275 to 290 odd levels on the higher end. So one should definitely, if someone is already holding a position, then the advice will be to stay hold in the counter. 275 followed by 290 is the target that one can expect in this counter from a short term or maybe kind of BTST or 2 to 3 trading days in this counter.
We've got a show in the morning at 11:30. This is Know Your Company, and often we see an impact because it provides investors an opportunity to take a look at the company and to take a look at the numbers behind what you're seeing in the results, right? And today's story was about Zota Healthcare. Sharad Dubey, who anchors the show, is joining in to give you the key takeaways. The stock is up as much as 5% in trade today. What did the management say to you, Sharad?
Well, it's a pretty interesting take. The company has not achieved its profitability, but the management had stated the way they are expanding, they are going to get that EBITDA profitability at least 1 year beforehand. And of course, there's a lot of bullishness also coming in the recent analyst meet as well. I asked the management about the other expansion plans, and they have stated that for the next 2 quarters, they will try to control their expansion, and this is because of improving their return ratios. Also, that Coco Store expansion, Coco Store means company-owned, company-operated stores. These stores are targeting an EBITDA margin of 20 to 25%, and the mature stores will improve the unit economics as well. And because of that, the markets are taking it quite positively.
Thank you for that, Sharat. Zota Healthcare doing well. That's the KYC impact, and you can catch that show every day at 11:30 a.m. All right, just a few minutes left to go before we wrap up for the day. Siddharth, Osho, want to thank you for joining in on this Monday afternoon. It's turning out to be a good day. We have slipped below the 24,100 mark, and that was an important level to mark, Alex. Pull up the intraday. The reason is because if you were steady above 24,100, you could look at levels of up to 24,400 next. But no, you have slid, not massively, but let's pull up the Nifty contributors. I want to see where that pressure is coming from, at least from the key index.
It's the heavyweights. So if you pull up, for example, if you pull up...
Asian Paints was already
no, I'm saying
down.
These two
have lost steam.
Yeah, so pull up the intraday charts for both Reliance Industries as well as HDFC Bank, one after the other perhaps, and then you'll see what I'm talking about. For Reliance Industries, okay, this is HDFC Bank, just a little bit of a cool off, but for Reliance Industries, it'll be more visible. So that actually will tell you why we've come off the high point of the day.
Yeah, just pull up the Nifty heat map for us, and you look at how pharmaceuticals are going strong. I mean, nothing moving. Cipla there, Tech Mahindra's actually zoomed. Dr. Reddy's coming in, Bajaj Auto, Sun Pharma. Some of the tech pack has also slid. The Nifty IT, when we pull up the sectoral heat map, will show that story. Bharat Electronics zooming to the top, but the number of red on the screen, or the amount of red on the screen, has increased. It's the consumption play here. Nestle, Tata, Titan, Asian Paints, Shriram Finance, Trent. This is telling us about the concerns with a poor monsoon more than anything else, Alex, and that's perhaps what you're seeing over here. The broader markets, though, are possibly closing slightly better off their highs as well, but the Nifty mid-cap 150 also 0.37% up, and Alex, even the small cap
index. In fact, that's going to be the story really. I think if you look back over the last several weeks, you've seen a significant amount of resilience and a lot of fund managers talking very favorably about stocks in the broader markets. I wonder when that action will move to the large caps. Ultimately, it's going to be determined by the earnings season, which kickstarts not too far from now.
Just a sectoral heat map before we close for the afternoon, and India Defence there right on top, followed by pharmaceutical stocks and media healthcare coming in close. But Nifty IT seems to have fallen from the highs of the day. But that's all the time we have on India Market Close. From Alex and the team that put the show together, thank you so much for watching. Stay tuned. All the action continues on NDTV Profit.
Welcome to NDTV Profit. You are tuned in to the Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharat Dubey. First up, let's get you the expert insights. Bitcoin range-bound trade persists for this. Argentina eases crypto taxes. El Salvador stacks Bitcoin. SEC Commissioner calls for self-protective crypto rules. And Japan Pension Fund eyes 1% crypto allocation. Those were the top crypto headlines at this hour. How should you actually navigate the digital assets, manage them, and also the risk and spotting the next big trend? Let's hear it from the crypto expert on the new playbook for investing. Here's a slice of conversation I had with Dilip Shenoy. He's the chairperson at Bharat Web3 Association on the need of deep technical knowledge to begin crypto investing.
I think that's a myth, as you said, is a myth buster. You do not need to be a blockchain engineer or a coder to understand the basics of virtual digital assets. Just as if you look at when you're using the internet, you need not be knowing what TCP or the IP works. And I think here, just like in the stock exchange, you do not know how to use an exchange. You just need to learn the fundamentals of the investment class that you are actually investing in this case, virtual digital assets, without deep technical expertise. What is essential is understanding the risks, doing proper research, investing only in what you can start small, and as you understand the sector, you grow. But it's a myth that you need to be have immense technical knowledge or something to invest in this sector. You need to use regulated and reputable platforms, preferably members of BWA. Financial literacy is far more important than technical literacy for a beginner.
So that's an interesting myth buster, but also listen into what he had to say on the type of knowledge one should start with.
So the first thing you got to actually understand the sector, and when you start investing in, let's say, in the stock market, you choose a few trustworthy shares that you want to go. And then similarly in the virtual digital assets, and then you use a good stockbroker, you do it through a reputed exchange, etc. Similarly in the virtual digital assets, use a trusted exchange, trusted by broker if you wish, but the exchange performs the same function, and invest in the basic understanding of the basic virtual digital assets that you are that you would like to invest in. It's not you should not look at people who promise you unbelievable returns or virtual digital assets that people tell you to invest in. But you should do your own research and be cautious and invest in this asset class very cautiously.
Right, and as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes on CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Good evening, you're watching Market Express with me, Shreyanshi Singh. Let's start by getting straight into the show, and we're going to get you a roundup in terms of markets as well as the top news and updates from within the country and across the globe. First things first, let's talk about Dalal Street that ended in a narrow range but managed to really hold firm. The Nifty closed above the 24,000 mark while the Sensex also gained over 200 points. You do have select buying in heavyweights that was helping benchmark indices finish in the positive territory. Let's move on and talk about the market breadth that remained positive with most sectors ending in the green. Pharma and oil and gas stocks led the gains, while you did have FMCG as well as consumption names really underperforming the lot, ending the session on the back foot. But on the flip side, let's also talk about one counter that was up and away in trade, as you can see on your screens with that 20% gain coming in. India's data center boom is creating new growth engines for industrial companies. Kirloskar Oil Engines is backed a large 192 megawatt order coming in from Hypernext for 96 OptiPrime power systems. And this order, in fact, marks a significant win for the company and further deepens its presence when it comes to digital infrastructure. It's a segment that is seeing strong demand as India's data storage and AI capabilities continue to expand. Let's also move on and talk about Citi that is turning increasingly positive on Cipla. The brokerage has maintained its buy rating with a target price of close to 1,700 rupees, implying upside of about 26% thereabout. And you can see that being reflected in the stock price as well, with that 4.8% upside coming in on the day for this particular counter. Now, you do have Citi that has placed the stock on a 90-day positive catalyst watch as well, and Citi is also believing that there are multiple triggers to the growth story. So something like key US product approvals, launches to recovery when it comes to the domestic respiratory business, that's something that makes it to their radar. And add to that potential US FDA clearance as well for the Indore plant that could really support the next leg of growth in terms of this particular counter. Let's move on and talk about a word coming in from brokerages, but this time let's also talk about Dr. Reddy's that was up and away in trade with that 1.5% uptick coming in. Nomura, in fact, is growing increasingly bullish when it comes to this particular counter. The brokerage has maintained its buy rating, raised the target price as well to somewhere close to 1,740 rupees from 1,600 rupees previously. And Nomura, in fact, is believing that the company's strategic shift towards branded businesses could really lift margins and support more sustainable earnings growth and also drive a re-rating in terms of the valuations as well. So that's something that they're talking about. Also talking about potential upside from the possible launch of biosimilar, which could really materially boost earnings estimates. Let's move on and talk about India's air conditioner market that is heating up like never before. So you do have Voltas that has crossed the 1 million air conditioner sales milestone, and the stock was buzzing away in trade, gave up some of its gains towards the fag end of the session. But when you talk about this particular milestone, it was delivered in record time, driven by some of those strong consumer demand trends as well, a refreshed product portfolio and a wider distribution network. Now, in terms of what the milestone represents, it talks about the strengthening position in terms of India's largest AC brand as well for Voltas. And it's not just Voltas. You did have LG Electronics also breaching the 1 million sales mark. Just for a bit of background, earlier this year, highlighting the rapid growth of India's cooling story, and Voltas, the one pick that is joining this particular list right now. Let's also move on and talk about delivery that is back in focus. And that's after shares climbed more than 3%, ended the session with about 4.5%, almost 5% uptick, in fact, coming in trade. The trigger was a Motilal Oswal note that reiterated its buy rating, but also the target price here was 580 rupees, which is very upwards of whatever the current market price reflecting on your screen. So there about 480 rupees is implying an upside of about 26% for context. So now the brokerage is also betting on strong execution, with express parcel volumes really jumping 73% on a year-on-year basis, supported by the e-com express acquisition. But add to that healthy consumption demand, tight cost controls that are really driving margin improvement as well. Let's move on and talk about Garden Reach Shipbuilders and Engineers that is in the spotlight, up about 2.5% after the government granted the Defence PSU Navratna status. And the development also sent shares to an over 1 month high, gives the company greater financial and operational autonomy, and the new status is expected to provide more flexibility when it comes to investment decisions. Now, it also strengthens execution capabilities supports the company's long-term growth ambitions in India's defense manufacturing space as well. Let's move on and talk about NOSL. In terms of the shares really racing ahead with that 20% upsurge really coming in after the government imposed anti-dumping duties on imports of select chemicals from China and the US and the EU also for a period of about 5 years. Now, this particular move is seen as a major positive for domestic rubber chemical manufacturers as it could improve pricing power and open up market share opportunities as well for them, and that's something that you can see reflected in the price as well. When you talk about this particular company, it's India's largest rubber chemicals maker, and the decision could really provide a significant boost to its core tire industry businesses as well. Let's move on and talk about Som Distilleries. That was in focus after the Excise Department in fact rejected the FY27 license for its Bhopal plant, and the company said that it has submitted detailed replies and supporting documents in response to the show cause notice. For now, the street is going to be closely watching the regulatory process. About a 5% knock coming in when you talk about this particular counter. So any further clarity really on the status of operations at this particular unit is something to watch out for. Let's also move on and talk about Sun Pharma that is expanding its distribution footprint. The company is going to be acquiring 100% of Mumbai-based Innocare Life Sciences, and that's on a deal valued at about 271 crore rupees. The entire transaction will be funded through cash consideration, expected to close on or before July 31st. So that's the date that you're marking on your calendars. The acquisition is set to strengthen the company's presence when it comes to pharma distribution, but also the branded portfolio segment. Let's move on and talk about John Cockerill that has secured a major order win as well. The company has bagged an 85 to 90 crore contract coming in from a particular company for a tunnel furnace package under its CRGO project. The order is scheduled to be executed over the next 15 months. Also further strengthens the company's order book amid continued investments in steel capacity and industrial infrastructure. Let's also move on and talk about Pace Digitech that is entering an aggressive expansion phase. The company plans to set up a research center in Pune as well and has approved the acquisition of its arm and announced a 7.5 gigawatt hour capacity addition. To support these plans, the company is going to be investing about 200 crore in capex, underscoring its growing ambitions when it comes to the energy storage and advanced manufacturing space. Let's move on and talk about Power Mech Projects that has secured a major order win coming in from JSW Thermal. The company has bagged somewhere close to 1,000 crore contract for civil and structural works for a 2 into 800 megawatt thermal power project, and the order is going to be executed over the next 36 months. So that's really what you're marking on your calendars. The stock was buzzing away in trade, about 2% uptick coming in on something that really further strengthens the company's order book, underscores the continued momentum in India's power generation capex cycle. Let's move on and talk about order wins galore in terms of Bharat Forge as well. That has also secured a significant defense order, bagging a 425 crore contract to really supply gas turbine generators to the Indian Navy over the next 5 years. This particular win is particularly notable as it marks the company's entry into the marine gas turbine segment. So that's really opening up a new growth avenue and further strengthening the company's presence when it comes to India's defense manufacturing ecosystem. Let's move on and talk about Good Luck India that has secured a major defense order win as well. And the company's subsidiary has bagged an order to the tune of about 255 crore rupees thereabout. The supply of 155mm long-range shells. The contract is scheduled to be executed over the next 10 months, further strengthens the company's presence in the defense manufacturing space while adding to revenue visibility going forward. Moving on, then let's talk about RVNL that has bagged another big ticket order. The company has secured somewhere close to the 2,900 crore rupee contract, and this is from NMDC for setting up buffer stockpiles and a blending yard with a handling capacity of close to 10 million tons per annum at Visakhapatnam. When you talk about this particular order, it's strengthening the company's execution pipeline, building on its robust order book of somewhere close to 99,000 crore rupees at the end of FY26, underscoring sustained momentum really coming through in its infrastructure business. Let's move on and talk about Tex Macro Rail that is strengthening its order momentum as well, with fresh wins coming in to the tune of about 265 crore rupees. The company has bagged a 253 crore rupee order from DSW South Rail Logistics for the supply of railway rakes and wagons as well, along with somewhere close to 11 crores transmission project as well from Odisha Power Transmission Corporation. And the latest orders really add to the company's 5,400 crore order book and support its strategy of expanding beyond Indian Railways into private sector and non-rail businesses as well. Let's also move on and talk about Advait Jewels' upcoming IPO that is drawing strong grey market interest as well, even before the issue opens for subscription, with the grey market premium reportedly surging to somewhere close to 46% as well. Strong GMP, in fact, is indicating robust investor appetite when it comes to this particular SME offering, and also points to expectations of a healthy listing gain as well. However, market experts continue to really advise investors to evaluate the company's fundamentals, valuation, and growth prospects rather than relying solely on grey market trends. Let's move on and talk to you about some business news. India is in preliminary discussions with the United Arab Emirates for a potential defense deal involving the export of the BrahMos supersonic cruise missile and the Akash Tir air defense system. Now, the talks come as the UAE looks to strengthen its military capabilities amid heightened regional security concerns. If finalized, this particular deal is going to be marking another major boost for India's growing defense export ambitions. Let's also move on and get to some national news then. The Kerala government is set to deploy artificial intelligence-powered systems, drones, and predictive crowd management. And this is at Sabrimala ahead of the upcoming pilgrimage season. This particular initiative, in fact, is aiming to improve crowd control, enhance pilgrim safety, and enable real-time monitoring across the temple complex, surrounding areas as well. And those are the routes that are going to be monitored as well. Authorities are saying that this particular technology is going to be helping manage the massive influx of devotees more efficiently during peak periods. And on to some unfortunate news then. A major industrial tragedy has struck Tamil Nadu's Tiruvallur district as well. 7 women migrant workers lost their lives and more than 60 others were affected after an ammonia gas leak at a private seafood processing and export unit near Periyapalayam as well. And most of the workers were migrants from Assam, Odisha and Jharkhand, were staying inside the factory premises. The government has ordered an inquiry while police have arrested the owner of the company as well. Moving on then, let's talk about Delhi that prepares for the monsoon. The Municipal Corporation of Delhi has in fact intensified its anti-encroachment action. The MCD is carrying out a demolition drive in West Delhi's Tilak Nagar, removing illegal structures allegedly built over a drainage channel. Officials are saying that the exercise is part of flood preparedness efforts that are aimed at improving drainage, ensuring smoother water flow and reducing the risk of waterlogging during the monsoon season. Moving on then, let's talk about Delhi taking a performance-first approach when it comes to public infrastructure. And I'm talking about the 473 crore project that covers about 96,000 streetlights across PWD roads that are going to be upgraded to smart LED systems with real-time monitoring as well. But there's a catch here. Contractors will be paid only if the lights continue to perform as promised. The no performance, no payment model links monthly payouts to service standards, aiming to improve accountability, maintenance and reliability of the city's streetlight network. And on to some international news now. Big political update coming in from the UK. Keir Starmer has announced that he's going to be stepping down as Prime Minister. And Labour leader admitting his party no longer believes that he's the right person to lead them into the next general election. With this, he becomes the 6th Prime Minister to exit in just 10 years, calling the role the proudest moment of his life. He's reflecting on rebuilding a party that he once described as politically and financially broken. He said that he had heard the answer from colleagues and accepts it, with some good grace also coming in. Starmer is confirming that he's informed the king and promised a smooth transition as well, pledging full support to his successor as he steps back to focus on his family in terms of the update coming in here. Let's also move on and talk about Europe grappling with an intense heat wave emergency. In France, 3 people have died due to heat-related health issues, while nearly 2,700 schools are set to close or modify timetables. Temperatures in Bordeaux are expected to exceed 42 degrees Celsius, with 49 regions, as many as 49 regions under the highest red heat alert, as authorities really are warning of dangerous conditions across large parts of Europe. Let's move on and talk about fresh signs of cautious normalization in the Strait of Hormuz. 4 Qatari-controlled LNG tankers have entered the waterway using the Iranian route for the first time, and this is for the first time since the US-Israeli war with Iran began. The moves also are coming in despite Iran's claim that it had again closed the strait over the weekend, suggesting that energy shippers are gradually testing the waters as hopes of de-escalation grow. And on to some sports updates now. Egypt secured their first ever FIFA World Cup 2026 victory with a convincing 3-1 win over New Zealand, boosting their hopes of reaching the knockout stage. Meanwhile, tournament surprise package Cape Verde continued their impressive run by holding Uruguay to a draw in the Group H as well. The results have added to a fresh twist really coming into the qualification race as underdogs continue to challenge football's traditional powerhouses. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You've got to be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Market ends higher as Nifty continues to be in a range ending just below 24,100 levels. Broader market outperforms the benchmarks today as Nifty Bank closes at 3.5-month high. Cipla and Bajaj Auto top the charts. Rupee slips against the greenback to end above 94.5 against the US dollar mark. The currency remained in range as investors digested fresh geopolitical developments and also Brent prices trading around $80 per barrel. Iran and the United States have reported progress in high-level talks held in Switzerland, with mediators Qatar and Pakistan announcing a 60-day roadmap towards a broader agreement. Technical negotiations will continue this week with discussions focused on regional tensions. NDTV Profit exclusive: fertilizer supply lines to India are back in motion. Around 10 to 12 vessels earlier stranded near the Strait of Hormuz amid rising tensions have now resumed their journey. Sources tell that these vessels are expected to dock in India over the next 2 to 3 days. US Trade Representative Jamison Greer is in India today to hold high-level talks with focus on ironing out the final differences in the proposed interim pact. The visit comes after weeks of intense negotiations. India seeks tariff edge before rolling out. Reports suggest that India is in talks to sell indigenous supersonic missile BrahMos and air defense control system Akash Tir to UAE. This comes after deal with Vietnam is in final stage. Keir Starmer resigns as UK Prime Minister and leader of the Labour Party after sustained pressure from the party. He's the 6th PM to quit in 10 years. Andy Burnham emerges as the front-runner for the top job. Bengal government announces its first budget. Women welfare gets big push with 36,000 crore rupee Annapurna scheme, 20% hike for DA hike for employees and 1 lakh jobs announced. Hello and welcome viewers, this is Profit 360 on NDTV Profit and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news.
Viewers, let's first have a look at how the Indian markets have ended today. The Lal Street has ended in a narrow range but managed to hold firm. The Nifty has closed above the 24,000 mark, while the Sensex has gained over 200 points as select buying in heavyweights has really helped the benchmark indices finish in positive territory. Now let's go over to my colleague Parth Goyal for a roundup.
Nifty has closed in green, up almost 0.4% today, and this was led by Cipla and Tech Mahindra, both of which were the top gainers in the index, with Cipla gaining over 4.7% and Tech Mahindra gaining over 1.8% for the day. The broader market today has outperformed the benchmark, with Nifty Midcap 150 gaining over 0.5%, led by Mankind Pharma and New India Assurance, both of which gained over 5% today. On the other side, Nifty Small Cap 250 also saw a gain of almost 0.8% today, led by Kirloskar Oil Engines and Triveni Turbine. Kirloskar Oil Engines was up over 20% today, led by the order win which the company saw from Hypernext, and Triveni Turbine also saw an uptick of 10% today. Now moving on to the sectoral side, all of the sectors ended in green except Nifty FMCG. Nifty Pharma was the top gaining sector of the day, up over 1.2%, led by Mankind Pharma and Cipla, both of which saw an uptick of over 5% today. Nifty FMCG on the other hand was the top losing sector, down by almost 0.5%, led by Varun Beverages and Emami, both of which were the top losers in the index. Varun Beverages seeing a downtick of 3.5% and Emami seeing a downtick of 1.5% today. Now on the sectoral side as well, Nifty FMCG has closed in red for the second consecutive day, while Nifty Metal has gained for the second day in a row. Also Nifty IT and Nifty Oil and Gas have snapped their 2-day losing streak, while Nifty Pharma ended in green for the third day in a row.
Thank you so much, Parth, for that market roundup. And we also spoke to Harish Krishnan, CFA CIO at AB Slam, on whether it's time to bet big on the banks and also the sectors he finds most attractive. He also shares his investment playbook and also discusses whether caution is returning to the market despite recovery. Let's listen in.
The banking space. I genuinely do think that the larger banks have a significant advantage, be it on technology, be it on customer acquisition cost, over these smaller banks, and therefore our preferences for the larger banks out there, which are primarily in Nifty, so to speak. If I look at, say, the metal pack, again, it's the big boys playbook out there, not so many as far as the mid cap or the small cap is concerned. If I look at sectors like insurance, which has not really set the stage on fire over the course of the last 5 years or so. Again, the larger names are consolidating in the industry and gaining market share compared to the smaller ones. So again, our preference over there is for the larger names.
Meanwhile, viewers, the rupee has closed at 94.68 against the US dollar and weakening by nearly 35 paise compared to Friday's close. And the domestic currency has remained under pressure through the session and even settled near the day's low amid a stronger dollar and even heightened demand for the greenback. And rising crude oil prices and also a cautious global risk sentiment also weighed on the rupee as investors have tracked the developments in the Middle East and their implications for energy markets. And market participants, well, they will continue to monitor oil prices, foreign fund flows, and even global currency trends for further cues. Now, to an NDTV Profit exclusive, viewers, the Reserve Bank of India is likely to issue the updated list of upper layer NBFCs very soon. Sources tell NDTV Profit, and my colleague Piyush Shukla brings us more details on this exclusive story.
The RBI is likely to come out with the updated list of upper layer NBFC very, very soon. The list is likely to remain unchanged, and the RBI is yet to take a decision on Tata Sons deregistration plea, so it will likely remain in the upper layer list. And the RBI could also add certain government-backed NBFCs in the upper layer list. We are aware earlier this year the RBI had come out with classification norms for upper layer NBFC, and there they had said explicitly mentioned that NBFCs with over 1 lakh crore AUM and those who are backed by the government can also now enter the upper layer list. So the list is likely to remain unchanged, and we can see government-backed NBFCs coming in the upper layer list soon. And just a bit of context, Tata Sons had applied for a deregistration as a CIC with the RBI in March 2024. The RBI is yet to take a final call on this, and hence they will likely remain in the upper layer list.
Viewers, the first round of US-Iran negotiations to end the war has concluded with what mediators Qatar and Pakistan are calling encouraging progress. So a joint statement is saying that both sides have agreed on a roadmap to reach a final deal within 60 days. And talks in Switzerland were described as positive and constructive, with agreement on continued technical discussions and even political oversight through a high-level committee. And Iran is saying that major progress has also been made on ending the Lebanon conflict. And the deal also includes reopening of the Strait of Hormuz, which is also easing the oil export restrictions and also restoring safe passage for commercial shipping. And what did J.D. Vance say about the deal, and how did Israeli president react? Let's listen in.
Never before has the Iranian and American leadership met at such a high level. What the president has asked us to do is turn over a new leaf, to transform our relationship with the people of Iran and to extend an outstretched hand that says to the people of Iran that if your leadership is willing to give up being a driver of regional instability, if they are willing to give up nuclear weapons ambitions for the long term, then the United States is willing to fundamentally transform our relationship with that country.
We prevented Iran from carrying out a plan to annihilate us, and today they would have had a nuclear weapon, an atomic bomb to do so. We prevented that from happening. We removed an existential danger. And had we not acted in Operation Rising Lion and then in Operation Roaring Lion, Iran would have had atomic bombs, and let me tell you something, they would have used them. That's what we prevented.
Viewers, let's look at the crude prices. So they have cooled off sharply, with Brent slipping below the $80 per barrel mark, with also WTI hovering near $77 per barrel range. And the decline comes after mediators Qatar and Pakistan have said that the US and Iran have agreed on a roadmap which is aimed at reaching a final agreement within the next 60 days, also easing concerns over the supply disruptions from the Middle East. And the latest development has raised hopes of smoother oil flows and even a gradual return of Iranian crude to global markets, which is prompting, the traders to unwind some of the geopolitical risk premium that had built into prices. And however, markets remain cautious as the agreement is still an interim framework, and also its durability will depend on progress in negotiations over the coming weeks. Let's also listen in to what William Lee, who is the chief economist, Global Economic Advisors, has to say on the crude prices.
The oil markets are showing that there's a lot of bluster, but in fact things are improving. But let's remember, Brent was over 100 not too long ago, and the fact that it's come down and has stayed down despite the statements by President Trump and the posturing by the walkout of the Iranian negotiators, I think the oil markets are saying this is just a lot of talk and posturing for TV, and also for Iran's internal audience. And in fact, what we really are probably going to be seeing going forward is some resolution to the blockade and some resolution to the oil supplies.
Viewers, let's look at an exclusive news update that's coming in. Sources tell NDTV Profit that 10 to 12 fertilizer vessels have stranded near the Strait of Hormuz, have resumed the journey to India. We have my colleague Rishabh joining us with more details on this development.
What we're picking up from top official sources is the fact that there are a bunch of vessels, roughly 10 to 12, that were earlier stranded near the Strait of Hormuz due to the obvious tensions that are around that area. There's the constant open and shut of that very narrow, very important for commerce Strait of Hormuz. So roughly 10 to 12 of those vessels, which are a combination of Indian flagged as well as foreign flagged vessels, but all of their destination is India, is what we're picking up. All of them are now on their way to India. They're expected to arrive over the next 2 or 3 days. I also checked almost all fertilizer stocks were up and have been up for a bit. What we have also is the details of these 10 to 12 vessels. Now, roughly 8 of them are set to carry urea-based fertilizers. India is the largest consumer of those urea-based fertilizers, and roughly 4 of them are carrying DAP or related raw materials. So that's the breakdown that we have at this point in time in terms of what is entering into India. Now, remember why stocks are up is, of course, because India is the largest importer of fertilizers. The incoming Kharif season is going to be extremely important for the agriculture-based economy here in India. That is sort of what lifts up everything in terms of sentiment as well. And that's what we're picking up in terms of the sort of fertilizer stock that is set to come into India after the sort of tensions that we've seen weighing down on the entire petrochemical chain. So this is a relief for almost everyone in the sector. All farmers should be sort of happy. The government has also been able to procure these fertilizers so far, and that seems to be continuing with these vessels coming in.
Right. Thank you so much, Rishabh, for that. In fact, we are switching gears now. India and UAE are in fast-moving early-stage talks for BrahMos missile and Akash Tir air defense exports. This is reflecting Abu Dhabi's push to diversify beyond the US suppliers. And my colleague Hiral is here with more details.
This is going to be interesting because BrahMos, we are just talking about UAE right now. In fact, last week, there were media reports also indicating that the deal with Vietnam for BrahMos is something which is nearing early stages in terms of closure. So both of these aspects will be the ones which will be positive. Now, if you talk about individual counters, there are multiple components to this. If you talk about the core component and subsystem suppliers, you have names like Data Patterns, Solar Industries, Premier Explosives, as well as Good Luck India and PTC Industries. These are the ones which land to benefit on this aspect. Apart from that, if you talk about the electronics and integration partners as well, you have names like BEL, HAL and Bharat Dynamics, the bigger names that actually come to the foray as well, who get to benefit in terms of BrahMos. And very lastly, if you have to look at the structural material and the heavy engineering providers, you have names like Paras Defense as well as Jindal Stainless. These are the names that tend to benefit out of the BrahMos deal. Now, to add to this, you have Akshatveer also, which is coming in. Now, a similar set of companies that will benefit on that deal as well. But interestingly, it's two deals that you're talking about right now, Tamanna. One is Vietnam, which was announced last week, which is nearing closure. And today, you're talking about UAE as well. So I think defense stocks are set to fire on the back of the orders that could be coming in.
Right. Thank you so much, Hiral, for that. In fact, U.S. Trade Representative Jamison Greer is set to visit New Delhi for talks aimed at giving the final touches to an interim India-U.S. trade deal. And Greer will hold discussions with Commerce and Industry Minister Piyush Goyal as both the sides work to resolve pending issues and even advance the first phase of the proposed BTA. Let's now watch a quick report on what this visit means.
The India-US trade deal is now entering its most crucial phase yet. A top American trade official is heading to New Delhi this week as both sides race to seal an interim agreement that would reshape one of the world's most important economic partnerships. US Trade Representative Jamison Greer is expected to hold high-level talks with Commerce Minister Piyush Goyal with the focus on ironing out the final differences in the proposed interim pact. The visit comes after weeks of intense negotiations and follows a push from PM Modi and US President Donald Trump to fast-track a broader bilateral trade agreement. At stake is far more than just trade. The deal could open new markets, lower tariffs, boost exports and give Indian goods a crucial edge in the American market. Both countries have already reported significant progress, with top officials saying they're now working to close the remaining gaps. And the clock is ticking. Commerce Minister Piyush Goyal has said the first phase of the agreement could be ready as early as mid-July. If that happens, it could mark a major breakthrough in the India-US economic ties and set the stage for a much bigger trade deal in the months ahead. For now, all eyes are on New Delhi, where the next few days could help decide the future of a trade relationship worth hundreds of billions of dollars.
And in fact, a big political update from the UK. Keir Starmer has announced that he will step down as Prime Minister and Labour leader, admitting his party no longer believes that he is the right person to lead them into the next general election. Now, with this, Starmer becomes the 6th Prime Minister to exit in 10 years, calling the role the proudest moment of his life, and Starmer has reflected on rebuilding a party he once described as politically and financially broken. He said that he had heard the answer from colleagues and, accepts it with good grace. Starmer confirmed that he has informed the king and promised a smooth transition, pledging full support to his successor as he steps back to focus on his family. And let's listen in to what he had to say in his exit speech.
When I leave the biggest job in the country, I shall spend more time on the most important job, being the best husband I can to my fantastic wife Vic, who has been a rock by my side through good times and bad, and being the best dad I can to my beautiful children, who are my pride and my joy.
Viewers, days after Pentagon blacklisted Chinese firms with linkages to the Chinese military, China is hitting back with its own set of sweeping measures. And in the latest, China has barred 46 American companies from its government procurement market and even slapped an export control on 10 others. So the restrictions prohibit the Chinese exporters from supplying dual-use items to the affected firms, and rare earth mining companies like MP Materials, USA Rare Earth, and defense giants like Lockheed Martin and Boeing Defense are amongst those targeted. So the latest Chinese measures come after Washington's decision to expand its list of blacklisted Chinese companies alleged to have ties to China's military. In fact, the Separatement of Telecommunications has released draft rules for allocating spectrum to satellite communication companies, taking another step towards rolling out satellite-based internet services in India. So the proposed framework spells out who can get the satellite spectrum, the charges they may have to pay, and also the conditions that they will need to meet. So the draft rules, however, do not cover entities such as BSNL and MTNL. The move is expected to bring greater clarity to the satellite communications sector, and as India prepares for wider adoption of space-based connectivity services. In fact, as Chinese smartphone maker Xiaomi is preparing to enter India's large home appliances market, Morgan Stanley believes that the competition is building up for domestic players, and my colleague Mahima is here with more details.
Xiaomi is entering India with its home appliances expansion, and this means that they're going to expand into ACs, refrigerators, washing machine, etc. So they're moving from the strategy of smartphone-led broader consumer growth to a broader electronic growth as well. Now, what does this mean for other consumer durable companies that are already into this game, right? This will, of course, definitely heighten competition for incumbents. Appliance entry is expected to, of course, intensify competition in the mid-market prices, and Xiaomi is known historically for its aggressive pricing approach, and that's how they break markets. And it's also strengthening its localization, manufacturing, and service infrastructure. So while it is negative for companies like LG, Whirlpool, Havells, Crompton, Blue Star, Voltas, etc., it turns out to be slightly positive for EMS players, because Xiaomi is actively scouting for EMS players for setting up local manufacturing. So this is a positive read-through definitely for counters like Dixon, Amber, PG Electroplast, as well as EPAC Durable. Plus, they've kind of elevated India business to South Asian headquarters, and this signals that they are, they're giving it higher strategic importance, greater capital allocation, as well as faster decision making from the global headquarters. So this is the overall view of what this means for Indian listed, consumer players.
Thank you so much, Mahima, for that. In fact, viewers, West Bengal's newly elected BJP government has presented its full budget since coming to power, laying out an ambitious roadmap focused on welfare, job creation, industrial growth, and infrastructure development. Presenting the budget in the Assembly, Finance Minister Swapan Das Gupta has positioned it as a blueprint for Bengal's economic revival. Now, with a mega development push, the government has allocated 40,000 crore rupees for new initiatives, industrial policy, and even renewed efforts to attract private investment. My colleague Shreyashi is breaking down the budget announcements.
The West Bengal government budget under the BJP is a sharp shift in priorities with focus on governance, welfare and development with big ticket announcements. Of course, the focus being on women welfare and strengthening of their rights. From one hand, we have seen around 36,000 crores being allotted for the women welfare scheme, along with 33% reservation in government jobs for women. Apart from that, 1 lakh vacancies in government posts will be filled through recruitment process in a transparent manner that has been announced in this budget. Apart from that, of course, industry being a big focus for this government to restore the credibility of the state as well as the growth trajectory of West Bengal that had seen a sharp hit after the Trinamool Congress government took charge of this state. Apart from that, of course, the fiscal deficit is being kept under 3% GDSP here in West Bengal by the finance minister. Other than that, the state government has also proposed the creation of at least 5 new districts for proper governance and administrative reforms, as well as land records now that will be digitized and linked to Aadhaar directly to ensure that all the land that is being allotted for government and non-government work is kept in a proper manner. Of course, with the BJP government now taking charge and with just about 8 months left of this fiscal year, the DA announcement for government employees has come as a big relief for those who have been waiting for this announcement. From the 18% from the previous government, it has now been hiked to 20%.
Viewers, looking at another story that's coming in. A fire has broke out at a 3-story commercial building in Lucknow, triggering a major emergency response. The incident has occurred at a coaching center in the Aliganj area, with reports of rescue and relief operations being carried out at the site. And Uttar Pradesh Chief Minister Yogi Adityanath has taken cognizance of the situation and even directed the officials to rush to the spot immediately. And he has ordered the acceleration of rescue efforts, ensured proper medical treatment for the injured, and asked the administration to maintain strict vigilance while continuously monitoring relief operations. And viewers, an explosion has been reported at a facility in Qatar's Ras Laffan industrial city, which is one of the world's largest energy and LNG hubs. Now, Qatar Energy has described the event as an operational incident that occurred during the startup phase of operations, triggering a fire at the facility. Now, emergency response teams were deployed immediately, and authorities are saying that the blaze has now been brought under control. And Ras Laffan plays a critical role in Qatar's natural gas and LNG exports, making it a strategically important energy complex. With that, viewers, it's a wrap on this edition of Profits 360. Stay tuned to NDTV Profit for more news and updates.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, as we decode new companies which come on the horizon, be it small cap, mid cap, and today also I've got you a very interesting company. But guess करने का कोशिश करिए. And it's a very interesting company. I've studied this. Surat-based pharma company छे. Interesting, but there are some more hints to it. It's the owner of the brand Dawa India. I must have seen it across the stores in cities and towns as well. And another hint I would like to give you is it's backed by 3P India and Singularity Fund. That is Madhu Kela and Prashant Jain, astute investors of the market. They have backed this company. The stock has also gone up 25% from March lows. Guess करने का कोशिश करिए कंपनी का नाम क्या है. The company in focus, Surat-based pharma company, is Zota Healthcare. This is the company which we are going to talk about. But why are we talking about this company? That's the big question. The questions, answers, we'll try to get it from the management. The first question is, they have achieved EBITDA positivity in FY26. पहले इन्होंने कहा था कि FY27 में करेंगे.
तो एग्जीक्यूशन अच्छा हुआ तो एक साल पहले ही they have received the EBITDA positivity. But of course, the company has come out with a cautionary statement also in the fourth quarter. They have stated that the company is slowing down expansion over the next 2 quarters. Why? We need to understand that. Also, the cocoa stores, they are achieving break even in 15 months versus 18 to 24 months. Cocoa is a very interesting story. Cocoa is of course company owned, company operated stores. We'll get to that. But also another question is Dava India. What are the expansion plans? 2500 से ज़्यादा stores already जो है, we have seen that for the company. We'll try to understand a little bit more. And the question remains is margin outlook now versus the future. Remember ये single digit वाला margin का play वाला business है. So we'll try to understand, does it change? Also the business outlook over the next 3 years, how things pan out. So we need to see things at a longer perspective for our analysis for this company, and these are the important questions which we'll be asking the management. Himanshu Muktilal Zota, he is of course one of the promoters in the company at Zota Healthcare. तो ये तो आज शो में क्या क्या होगा उस पे हम फोकस करेंगे, बट कंपनी क्या करती है, दैट्स द मोस्ट इंपॉर्टेंट क्वेश्चन, और कंपनी में फायदा कहाँ बनेगा. दैट्स व्हाई आई एम हियर एट KYC to give you that clarity. It's a Surat-based pharma company and it was incorporated in the year 2000. If you look at more details, it's into pharma, Ayurveda, nutraceutical and OTC products. What's the product distribution? I'll get back to you on that in a while. Now, of course, the company sources directly from the manufacturers and sells straight to the consumers. यानी कि बड़ा retailer नहीं है, there is no big distributor. So this is where the company's dhanda business model is there. Interestingly, 2 large astute investors are there. 3P India's Prashant Jain is invested in the company, and Madhu Kela, promoted at NTT, which is Singularity Fund, they are backing this company. Interesting, right? Also, the marketing, export and the retail pharmacy chain, these are the main division. Of course, Dava India is the brand. If you are, on a daily basis, if you deal with this company, it's a generic pharma chain and it has roughly 2600 stores. Generic matlab to saste dawai hote hain. Of course, for the masses, so they cater to the masses, and of course, इसमें margin जो है छोटा रहता है. Also, they've started getting the brand ambassadors. जब हम masses की बात करते हैं, so look at that, Akshay Kumar, Sunil Shetty, and now MS Dhoni, all of them are there. So that's pretty interesting for a 4,500 crore market cap company as well. But let's move on to the other side of the story. What are the terms to know? जब आप ये सब companies को analyze करते हैं, तो Coco means what? Coco is company owned, company operated. Note down कर लीजिए अगर आप first time analysts हैं. Let's look at the other abbreviation, FOCO. It is franchise owned, company operated. ये थोड़ा सा asset light रहता है. So this is also pretty much there, but there's a mix of both of these type of stores when you analyze a company like Zota Healthcare. What are the store additions? This is very much important. Coco, FOFO, we have given you both the definitions. So bar I won't repeat. Around 804 store additions came in FY26. Totally 1,000 of them has come. So the company is expanding a lot, and when the company expands, there will be a little bit of pressure on the return ratios. But how does the revenue breakup look like? 77% of the revenue comes from Dava India. But if you break it down, there are other segments also which you should be tracking. The domestic segment is roughly 13%. Exports is quite less. It's around 3%. Everyday herbal group, that's where they're trying to develop more, is just 3%. And other segments comes in at 1%. Also the product portfolio, how things happen here. This is the chronic product. The chronic product portfolio is something where the customer stickiness is very much there, and it's a repeat customer बहुत आते हैं. तो ये धंधे में repeat customer बहुत आपको दिखने मिलेगा. OTC is nothing but over the counter products होते हैं, largely generic में रहते हैं, so उतना subscription नहीं लगता है. This is how I simplify it for you for a technical company like Zota Healthcare. But what may work for the company? There are some points which I have analyzed, and I've sorted it for you. Faster than anticipated path to profitability. And this is where the market is trying to give a premium to this company. It's backed by strong, astute investors. कोई बड़े FIs नहीं है, but they also have increased their stake, so that's pretty much interesting. Also, they're improving their store level economics. SSG growth हुआ या mature stores आ रहे हैं, and when this starts happening, the numbers start showing well. Margins, path to profitability. And look at that average wallet spend. जो generic pharmacy का धंधा है, that average wallet spend per customer, that is and that is where a customer stickiness is also coming in. So a lot of engines are firing very positively for the company. What may not work? There is the other side of the coin also, which we get you for the company in KYC, the pressure on return ratios amidst this expansion. तो अगर expand बड़ा कर रहे हैं तो कभी-कभी balance sheet में pressure आता है, working capital ratios में pressure आता है. That's where a little bit of concern comes in. But remember, it's a low margin business at the end of the day. Company needs to show higher volumes. That is how you analyze companies like this. But to get in more perspective, we have our KYC ratings also, like income statement, balance sheet, cash flow. All these are the necessary parameters where we judge a company in KYC. This of course includes return ratio, shareholding pattern, what has moved, what hasn't, how much money has the company made for the investors. Valuations, we'll try to get it from its historical number, how things actually pan out for this company, and also the outlook. We'll try to figure out what the overall outlook suggests for the company. But let's go for the first rating, what's happening here, and that is the income statement. In our income statement, largely the top line growth is something you should be watching out for. I'll come back on the EBITDA and the profitability front. 3-year CAGR is 100%. So the growth is looking a J curve hockey stick. But if you look at it, the path to profitability, that's the big question coming in. But company had stated that they have achieved the EBITDA profitability 1 year before the expectations. So both sides is pretty interesting to look at. Also, apart from the income statement, if you look at how the things have moved, that's been largely neutral, but balance sheet is strong. The borrowing levels, it's largely debt free. And remember, the working capital, that's very high. And because of that, they recently did a QIP also of 350 crore rupees. Usse kya hua? Promoter ka stake dilute hua. But overall, working capital issues, that gets sorted. So right now, the balance sheet management is strong. 96 crore is in the cash balance also. And they haven't deployed everything yet. And that's why they are lowering their expansion plans, at least for the next 2 quarters. It's a strong thumbs up for the balance sheet. Let's talk about the cash flow. What happens here? Cash flow largely is, we could say, is pretty decent. There's a little bit of pressure coming in because of the expansion. That's why, there are mixed cues coming in our analysis. There seems to be a good cash flow in FY26. And remember, QIP proceeds also come in. So it's better not to judge the company right now, because I feel it's still a work in progress in the change in the model and the way its path to profitability is coming in. So it's a neutral rating when it comes to the cash flow segment. Let's talk about the shareholding. What's happening here? And largely we see the shareholding that has seen a dip here. This is of course coming in because of the fundraisers which were happening. FIs, DIs were 0% in March 2024. But look at the exposure coming in. 3P India, Singularity Fund, all the large players, astute investors leading these entities have taken stakes. 8% for FIs, DIs it's 6%. So this is where we see the institutional participation coming in, giving a validation to the company's story. So it's a thumbs up when it comes to the shareholding segment. Also, apart from the shareholding, let's talk about the other key criteria. If you could get in the return ratios, which I had pointed out, that was a little bit of problem. We'll get to that as well. But from March lows, the stock is up 25%. From 2025 highs, it's still down 23%. But for 1 year, stock has given 40% return. Last 5 years, it is 7x. So of course, congratulations if you are a long-term investor, and I have given this a strong thumbs up as well. Okay, so let's talk about the return ratios. I had mentioned you earlier about the return ratios, also how things actually pan out. But return ratios, look at that. FY23 it was 15, but the company started expanding. And when the company expands, higher working capital comes, and you will see all of them giving a pressure. But company जिस तरह EBITDA profitability लाएगी, जिस तरह PAT profitability आएगा, then these reverse also. And during bad times, smart money also comes. So I'm going to give this on the past data a thumbs down when it comes to the ROC numbers. Valuations, let's have a look at it, what things pan out. Nirmal Bang tracks this. They are getting very bullish on this counter as well. The EV EBITDA multiple, of course, these numbers are pretty high because the company is going for that EBITDA profitability. But look at that, it's around coming at around FY28 numbers at 23 times. That is where I feel like, on a forward basis, the stock is quite cheap. That's why I'm going to give this valuations a thumbs up. But apart from valuations, what does the outlook suggest? And that is where, we try to understand the long-term vision of reaching 5,000 Dawa India stores by FY29. That's the first outlook coming in. PAT level profitability, it can come by the end of FY27, or it can be pushed through the first quarter of FY28 as well. And the mature store growth, when that starts coming in, then your unit economics of your stores start increasing. Payback period भी जो है अब कह सकते हैं कि कम हो गया है. They are moderating the pace of expansion for the next 2 quarters because there has been a good expansion already, and there might be a little bit of pressure on the books, and that is why a conservative approach is coming in from the promoters and the company. But net the outlook looks very strong. So I've given this a thumbs up. But let's give you the entire picture of this company, the KYC ratings for Zota Healthcare. It's a very interesting company. And let's see what has happened. Income statement has been neutral. My concern remains for the return ratio because they're expanding very heavily. Balance sheet has been managed very nicely. The long-term debt is not there so much. There was a QIP fundraise also. Let's pull out the other ratings also to give you what the picture is all about. Shareholding of good astute investors, FISDI is coming in. It has all made 7x returns to the investor the last 5 years. Valuations, the FY28, they look compelling, and the outlook also shows a good strength. So let's give in the entire picture for Zota Healthcare, and it comes in at 6 out of 8. One of the higher numbers of the average KYC show ratings we give for this company. So it's a pretty interesting story, but we need to understand what else is there which fuels the company, or is there any drag also in the short term. And let's get in the speakers. His Himanshu Muktilal Zota is the promoter and whole-time director. An interesting tidbit about Himanshu as well. He has been associated since the inception of the company. He has a diploma in pharmacy from Board of Technical Examinations, and also I'd like to point out almost a 3-decade experience is coming in at play. So we'll try to understand the entire story about it and how the management has moved their business models from the inception till now. And joining us, we have Himanshu Muktilal Zota. Is the promoter and whole-time director at Zota Healthcare. Good afternoon, Himanshu bhai. It's always a pleasure to have you at NDTV Profit. And there's a lot of bullishness coming in your counter. I just wanted to understand, आपकी जो profitability थी FY27 में ही आ गई. बात थी कि FY27 में आने थी, FY26 में EBITDA profitability आ गई. कैसे हुआ ये?
ये रिस्पॉन्स सिंस लास्ट 2 साल से जेनरिक अवेयरनेस काफी चेंज हुई है. हमारे माननीय प्रधानमंत्री नरेंद्र मोदी जी भी काफी मेहनत कर रहे हैं जेनरिक अवेयरनेस के लिए. और सिंस लास्ट 2 साल में जो जेनरिक का ट्रेंड बढ़ा है, लोगों को एक्सेप्टेंस और जेनरिक के लिए जो एक्सेप्टेंस बढ़ा है, उसके कारण हम जो थॉट प्रोसेस था हमारे दिमाग में कि 27 तक ये प्रॉफिटेबली आएगी, वो अर्ली आ गई. मतलब सेल्स अच्छा आ रहा है, एक्सेप्टेंस अच्छा है जेनरिक का, फुटफॉल अच्छा आ रहा है, और इसी की वजह से ये चेंजेस हुए.
राइट. हिमांशु भाई, अपार्ट फ्रॉम दिस, व्हाट्स द ग्रोथ आउटलुक लुकिंग लाइक फॉर FY27? मार्जिन पे आपका धंधा सिंगल डिजिट मार्जिन पे चलता है, ये कैसे चेंज होगा या ऐसा ही धंधा रहेगा, आप वॉल्यूम पे ज्यादा फोकस करेंगे? वी जस्ट वांट टू अंडरस्टैंड द एंटायर FY27 आउटलुक. ये साल अब क्या होगा?
एज सच ये साल में हम फॉर एग्जांपल लास्ट ईयर हम रफली कैश नेगेटिव पे थे. मतलब रफली 45 करोड़ समथिंग कंसोल लेवल पे कैश नेगेटिव पे थे हम. तो करंट ईयर में वी आर एक्सपेक्टिंग कि ये ऑलमोस्ट ये कैश नेगेटिव ऑलमोस्ट 0 हो जाएगा पीबीटी लेवल पे. और अगले 2-3 साल में जैसे जैसे हमारा बिजनेस बढ़ता जा रहा है, क्योंकि हमारा जो SSG है, सेम स्टोर ग्रोथ, आपने देखा होगा कि सेम स्टोर ग्रोथ काफी अच्छा है. मतलब अगर मैं मैच्योर स्टोर की बात करूं, जो 3 से 4 साल पुराना स्टोर है, वहां पे भी 20 से 25% के बीच में SSG आ रहा है. तो 2 इयर्स वाले स्टोर है, वहां पे तो 40-50% का सेम स्टोर ग्रोथ आ रहा है. सो ये प्रॉफिटेबिलिटी यहाँ से ही आई है, और ये कंटिन्यूसली ग्रोथ अगले 2-3 साल में ये काफी चेंज ओवर होगा और काफी टर्न अराउंड होगा.
ओके, ये तो हम समझ में आ गया. लेकिन हिमांशु भाई, आपसे सवाल पूछना है कि 4th क्वार्टर में आपने एक बहुत इंपॉर्टेंट बात कही थी कि हमारी जो एक्सपेंशन है, आप एक्सपेंशन तो बहुत स्ट्रांग करें, लेकिन अगले 2 क्वार्टर अपनी एक्सपेंशन को आप थोड़ा सा कम करेंगे. ऐसा क्यों करेंगे और इससे कुछ फायदा आएगा क्या रिटर्न रेशियो में? क्योंकि रिटर्न रेशियोज में बहुत दबाव है, आपके आरओसी थोड़े नेगेटिव है क्योंकि आप बहुत ज्यादा एक्सपैंड शायद जल्दी कर रहे हैं। तो क्यों आप कर रहे हैं अगले 2 क्वार्टर पे हल्का क्यों रहेंगे एक्सपेंशन पे? व्हाट्स द रीजन फॉर इट सर?
या सो मेजरली हमारा जो 2 क्वार्टर थोड़ा सा स्लो डाउन, हमको बंद नहीं करना था, थोड़ा सा स्लो डाउन करना था। और स्लो डाउन करने का थोड़ा सा ये रीजन था कि हम कंटिन्यूसली लास्ट 8 क्वार्टर से हम कंटिन्यूसली ग्रोथ कर रहे हैं, क्योंकि लास्ट ईयर भी हमने 800 स्टोर खोले और उसके अगले साल भी हमने 600 स्टोर खोले। तो ये 1400-1500 स्टोर हमने लास्ट 2 साल में खोले। समवेयर अबाउट 200 स्टोर का हम 1650 कोको स्टोर पे पहुंच गए, मतलब ऑलमोस्ट 10x स्टोर हमने बढ़ाया सिंस लास्ट 2 साल में। तो हम ये चाहते थे कि 1 या 2 क्वार्टर थोड़ा सा स्लो डाउन करें, हम बैकएंड को पूरा स्ट्रॉन्ग करें और अगले जो माइलस्टोन है, अगला जो हमारा जो ग्रोथ स्टोरी है, उसको अगेंस्ट बैकएंड पूरा स्ट्रॉन्ग कर दे, ताकि हमारा जो भी इन प्रोसेस स्टोर था वो जीरो हो जाए, थोड़ा सा प्रॉफिटेबिलिटी बिल्ड हो। क्योंकि 1 या 2 क्वार्टर में अगर स्लो डाउन कर लूंगा तो मेरा प्रॉफिटेबिलिटी बिल्ड होगा, मतलब। तो 2-3 रीजन था। एक तो मेरा बैकएंड थोड़ा सा स्ट्रॉन्ग करना था मुझे, क्योंकि मुझे सप्लाई चेन, हमने जैसे अभी सूरत में है, एक सेकंड सप्लाई चेन हमने दिल्ली में, हरियाणा में अभी रिसेंट में स्टार्ट किया। तो ये सब स्ट्रीमलाइन करने के लिए और बैकएंड को स्ट्रॉन्ग करने के लिए हम थोड़ा सा स्लो डाउन कर रहे हैं। हालांकि हम इस साल में नंबर ऑफ स्टोर तो उतना ही खोल रहे जो हमारा टारगेट था। हम क्या कर रहे हैं, पहले क्वार्टर में और 3rd और 4th क्वार्टर में खोल रहे हैं, 2nd क्वार्टर थोड़ा सा स्लो डाउन कर रहे हैं। लेकिन जो पूरे साल का जो हमारा टारगेट था समवेयर अबाउट 600 to 700 स्टोर, वो इंटैक्ट है, मतलब वो हम खोल ही देंगे इस साल।
जी बिल्कुल। तो पूरे साल का जो ग्रोथ स्टोरी है वो इंटैक्ट है, लेकिन अभी 1-2 क्वार्टर में जो है थोड़ी सी जो है स्ट्रैटेजी आप चेंज कर रहे हैं। लेकिन 350 करोड़ का एक QIP फंड रेज भी किए थे, उसका एप्लीकेशन आप कहाँ कर रहे हैं? एक्सपेंशन में ही कर रहे हैं, वर्किंग कैपिटल में कर रहे हैं, या कुछ एक्विजिशन भी सोच रहे हैं, कुछ लोकल ब्रांड खरीदें?
नहीं, ये प्योरली मेजरली इसमें से 90% जो फंड है वो एलोकेशन होगा सिर्फ और सिर्फ दवा इंडिया में, जिससे हम नया स्टोर भी खोल रहे हैं और एग्जिस्टिंग स्टोर में जो वर्किंग कैपिटल चाहिए दोनों यहाँ से फुलफिल कर रहे हैं। तो ये 350 करोड़ से रफली 1300 से 1500 स्टोर खुल जाएंगे अगले 2 साल में, करंट ईयर और नेक्स्ट फाइनेंशियल ईयर। और ये हम कंफर्टेबली करंट ईयर और नेक्स्ट फाइनेंशियल ईयर में 1300 से 1500 कोको स्टोर हम खोल देंगे।
तो 1300 से 1500 स्टोर्स जो है कोको स्टोर वो खोलेंगे। दर्शकों को बता दूं कि कोको मींस कंपनी ओन्ड, कंपनी ऑपरेटेड। लेकिन एक बार हमारे दर्शकों को आप बताइए कि कोको और फोको में क्या फर्क होता है और एसेट लाइट मॉडल कौन सा रहता है, और आपकी कंपनी की स्ट्रैटेजी क्या रहेगी कोको और फोको के कहेंगे कोको और फोको की एक्सपेंशन को लेके?
या सो हमने इनिशियल फर्स्ट 2017 में जब हमने दवा इंडिया स्टार्ट किया था, तो फर्स्ट 3 से 4 साल हमने सिर्फ फ्रेंचाइजी स्टोर ही खोले थे, फोफो स्टोर ही खोले थे, जो कि कंप्लीटली एसेट लाइट मॉडल है। क्योंकि फोफो में हमारा इन्वेस्टमेंट कुछ भी नहीं है, जो फ्रेंचाइजी ओनर है वही इन्वेस्ट करता है पूरा का पूरा, और हम सिर्फ सप्लाई करते हैं। और कोको स्टोर है, वहां पे पूरा कैपेक्स हमारा लगता है, इवन ऑपरेटिंग एक्सपेंसेस, रेंट वगैरह या मैन पावर कॉस्ट भी हमारी लगती है। लेकिन दोनों में डिफरेंस ये कि कोको में कंट्रोल अच्छा रहता है, हमारे कस्टमर को जो मिलना चाहिए प्रोडक्ट वो प्रॉपरली मिलती है, और प्रॉफिटेबिलिटी कोको में काफी अच्छी है। सिंस हमने 2-3 साल में देखा है कि कोको में हमारा जो ग्रॉस प्रॉफिट मार्जिन इज मोर देन 65%, जो कि फ्रेंचाइजी स्टोर में हमारा आवर मार्जिन विल बी समवेयर अबाउट 40%। और हमारा फोकस भी यही है कि हम नेक्स्ट 3 इयर्स में हम 80% कोको ही करेंगे और 20-25% हम सिर्फ फोफो करेंगे।
ठीक है।
80 और करने का भी एक रीजन था
अच्छा।
कि फोफो में कंट्रोलिंग नहीं है, वो बाहर की प्रोडक्ट लाके बेच सकता है, वो और कोई प्रोडक्ट लाके बेच सकता है जहां मेरा ब्रांड डैमेज होता है। और ये सब देखने के बाद हमने कोको पे ही ज्यादा फोकस किया, और हमारा फोकस भी इसलिए कोको ही है।
जी बिल्कुल। तो ये फोकस तो आपने बता दिया कि अपने ब्रांड को डाइल्यूट नहीं करेंगे, लेकिन दोनों को जोड़ देते हैं, मार्जिन का क्या आउटलुक रहेगा? सवाल सब बोलते हैं कि अरे ये तो 5% से नीचे का मार्जिन का धंधा है, इस धंधे में हम एक्चुअल मार्जिन का बेनिफिट कब देखेंगे? 2-3 साल में देखेंगे, और अगर देखते हैं तो सोचिए 3 साल बाद आपकी कंपनी की मार्जिन क्या 9-10% की होगी? कैसा रहेगा ये धंधा?
मार्जिन अगर मैं मार्जिन की बात करूं तो जो हमारे कोको स्टोर है, फॉर एग्जांपल जो भी हमारे 4 साल पुराने कोको स्टोर है, वो स्टोर लेवल एबिटा विल बी मोर देन 35%, मतलब तो ये 4-5% का गेम ही नहीं है। लेकिन इसको मैच्योर होने में जो भी 3 से 5 साल लगता है, नॉर्मली स्टोर को मैच्योर होने में 3 to 5 years लगते हैं कंप्लीट मैच्योर होने में। तो ये मैच्योर होने के बाद फॉर एग्जांपल अगर आज 27 में खड़े हैं और मैं अगर 30 और 31 की बात करूं, तो मैच्योर लेवल पे एट सारे स्टोर हमारे जब उस लेवल पे पहुंच जाएंगे तब ये EBITDA मार्जिन विल समवेयर अबाउट मोर देन 20-25%.
बिल्कुल. एंड ऑफ कोर्स कोको का ब्रेक इवन भी आप देखें तो 15 महीना में हो रहा है और आप पहले 24 महीना था, तो धंधा भी इवॉल्व हो रहा है, मार्जिन्स भी इवॉल्व हो रहा है और कंपनी भी देखें तो एक इवॉल्व हो रही है कंपनी. एंड ऑफ कोर्स मार्केट विल स्लोली ट्राई टू अंडरस्टैंड दैट एज वेल. बट हिमांशु भाई, बहुत अच्छा लगा आपसे बात करके और आपने पूरा बिजनेस मॉडल समझाया, आगे क्या होगी कंपनी में उस पर भी आपने जो है बहुत विशेष टिप्पणी दी. धन्यवाद एंड बेस्ट ऑफ लक फॉर द फ्यूचर सर.
Thank you so much.
So that's the management speaking about the growth, the way the business model is changing, margins are there, and interestingly, smart money is already invested. Of course, the stock has given multi-bagger returns, but the valuations, the brokerages feel is still cheap right now. Interesting story, right? So for more of this, stay tuned to KYC, and yes, keep watching NDTV Profit.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. on Editor's Cut. Our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Presented by Suzlon, good energies that work.
Welcome to Your Money Matters. Of course, you're watching NDTV Profit, and this is a show where we talk about personal finance and what matters for your money. Today, we are going to talk about two very, very different topics, but very interesting ones. First one is that, how much money should you generally have in your bank accounts? And the second one that we're going to touch upon is the two new recent small cap mutual funds that have come in. One is, of course, Helios small cap, and the second one is Abacus. What is the difference between the strategies? Which one should you probably look forward to, because they are fairly recently new? All of those things we're going to talk about in the next segment. But the first one, as to how much money should you genuinely hold in your bank account to make sure that there's a balance between having money enough in your bank account during emergencies, but at the same time to make sure that it's not lying idle in your bank account and you are making money off it as well. So to take this conversation ahead, we're joined by Vishal Dhawan, who's the founder and CEO of Plan Ahead Wealth Advisors, joining us now. Vishal, thank you so much for taking out the time. I think I'll start by asking you with regards to if there is a thumb rule what should be the amount of cash that one should keep in their savings account. If there's a thumb rule, what does it look like?
So I think it's a place where I think a lot of customization needs to happen, and I think there are 2 or 3 different variables that people need to keep in mind. Number one is how many bank accounts do they actually have? Because what we invariably find is that, people tend to have more bank accounts than they actually need. A lot of people who are salaried, for example, tend to open salary accounts which, keep changing as they move across employers. But the bank accounts don't actually close. So what ends up happening is they have a primary bank account that tends to, get the salary credit. And then they have these other bank accounts which tend to have some balances lying around for different reasons. So that's number one. Number two is, how many members in the family are actually earning and therefore supporting expenses for the family. So what you will typically find is that in double income families, there may be incomes coming in both from husband and wife.
Correct.
And each of them is maintaining a certain type of balances in their account. And it's not necessary that the two are in sync with each other, because sometimes their finances itself are not integrated. Or even if they're integrated, each of them likes to see a certain amount of money, which gives them psychological comfort, always showing up in their bank. The third element which we need to keep in mind is that, there is a lot of risk in leaving money lying in banks unattended today, simply because of the fact that there is a lot of challenges around security of OTPs and a lot of other things that also come into play. And we read about this every single day, where someone is losing money because they ended up doing a wrong UPI transaction or did something which was not supposed to be done. So I would say that, a lot of these factors will come into play, but fundamentally a good thumb rule to use is to say that about 30 days of my expenses, which means roughly about a month of my expenses, I can leave in my savings account, even though that may not be equal to my emergency fund or my contingency fund, which needs to be much larger. Of my entire requirement, roughly about a month of it lies in my savings account, so that any expense needs, which are normal expense needs, my ECS payments, my UPI payments, etc., can happen comfortably without me feeling constrained.
Perfect. And you very aptly put, the four different pointers that you did, Vishal, and we'll talk about each one of them individually as well. But sticking to the part where you said that, this is irrespective of the emergency fund. A lot of people, even today, do not realize that emergency fund of 3 to 6 months that we've generally talked about need not be in your savings account, right? It could be a part of, a short-term duration fund that you put in, or a very liquid fund that you can put your money in, so that it's not just lying idle in your bank account, but it also grows at the same time. So that's the one part of my question, that firstly, to make people aware as to how they should bifurcate these two terms. And the second one, do you think the 3 to 6 months rule now in India is outdated, considering that we've seen so much inflation, plus like you said, now there are families where there are two income earners. So do you think that there is a change in that 3 to 6 months rule?
So I think I'll take the second one first. So I think it's very important to understand, the design of income flows for families. So let's say if there's an entrepreneur, a lot of times his or her income flow itself may be a little uncertain, or as the economy sees more and more gig sort of assignments and consulting assignments come into play, the way that inflows itself happen may not end up being at a fixed level every month. Now, for a lot of these types of individuals, the amount of money that they may need in a contingency or emergency fund mode may end up being closer to 12 months rather than 3 to 6 months, because of this variability in income itself. The second is that there is a very large number of such people who are either salaried or who run businesses, who also have loans that they have taken. And what ends up happening is their ability to service a loan is something that they need to keep top of mind when they're making this decision around emergency provisioning, because if there is a delay in salaries coming in for some reason, or some cash flows which get mismatched, you still have no flexibility on your payment for your EMIs. And therefore, I would say that for anyone who's got an EMI going, by default, if let us say they were planning to keep a 3-month buffer as an emergency fund, they may need to keep a 3-month buffer plus a 6-month of EMI buffer that they are calculating. If they were going to keep a 6-month buffer, they may want to keep a 6-month buffer plus a 12-month EMI that is coming through. So it's very important to understand the sources of income that you get.
Correct.
How predictable are they? And obviously, if there are two incomes coming in, then it helps. Because what may happen is even if one income stops for some reason, the second income will hopefully continue. So I think those families can afford to be a little bit more flexible with their contingency and emergency needs as compared to other families. One important other parameter to keep in mind here is what is the kind of health insurance that you already have access to. And if there are dependencies of people who are, for example, senior citizens who may need to be supported in case there is a medical emergency, because in that case, the contingency fund requirement may also be larger because you may need to draw down on this contingency fund in case there is some medical situation. Now, coming to the options in terms of how to build this emergency fund, the critical thing for people to keep in mind, and you pointed out to high inflation, which is the reality, is that in a savings account, normally you will earn anywhere between 2.5% to 4% per annum. Inflation itself is a higher number than that. And therefore, as you keep your money liquid in a savings account, you actually end up losing the real value of money on an ongoing basis. So what tends to be a good set of things to look at for individuals is, number one, they can look at what are called sweep fixed deposit accounts or flexi fixed deposit accounts, where the money can automatically sweep into a fixed deposit above a certain threshold. And if there is a requirement of money, it automatically sweeps back.
Correct.
The advantage of that is that it's very easy to use. The disadvantage is that it may end up meaning that people end up spending more than they actually should be spending because there is no control on that flow of money. In contrast, they might decide to go to a liquid fund or a money market fund or a arbitrage fund, depending on their tax bracket, and look to keep the balance amount of money there, because in case there is a requirement of money there, it's still available within a 1 day working day or a 2 working day basis, but you get a rate of return which at least matches or beats inflation to a small extent. And therefore you're protected against inflation as well the moment you do that.
This reminds me of the fact that people also a lot of times don't understand, because you did mention, right, that if you change your job, you probably open a new account and you forget that there's some balance lying in your previous account as well. And a lot of times, people end up having multiple bank accounts. But in my opinion, and you can correct me here, is that ideally anybody should have 3 types of bank account. 3 bank account. One, which is of course where your salary comes in. Second account is where you, as soon as your salary gets credited, you send that particular amount that you want to invest in the next bank account. And third, if you are married, there has to be a joint account from which you make these joint expenditures. This is what my understanding is. How would you put this into perspective? How many bank accounts should one hold?
So I think it's a good idea to have 3 of them.
Yeah.
In the case of certain families, they may decide to just have 2 instead of having 3. But in any case, our belief is that between 2 and 3 is the maximum that's needed. Beyond that is not necessary. I think one of the good ideas to do is to distribute those bank accounts, if you're having 2 or 3, into different banks, so that anything which sort of causes a challenge with one particular bank, or your login in one particular bank or any of that, does not mean that your cash flow gets completely hindered because all your access goes away at the same time. So I think there are 2 levels of control. One is the number of bank accounts. The second is the number of banks itself. And trying to distribute to more than one bank, these 2 or 3 bank accounts works well.
Fair. Okay, Vishal, thank you so much for taking on the time and helping us decode this entire topic. I'm sure our viewers have a good takeaway and understanding of what they should do now with their bank account. So thank you so much for taking on the time.
Thank you so much for having me over.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Alright, so we spoke about how to manage your bank accounts and how much money should you actually have in your savings account and what should you do with the surplus. But the next one is also a very interesting one. We're going to try to compare the two new recent small cap mutual funds. One is Abacus and the other one is Helios. And, to take this conversation ahead and to understand what the different strategies are for both of these and what is the enthusiasm around for both of these, we're now joined by Santosh Joseph, who's the founder of Germinate Investor Services, joining us now. Santosh, always a pleasure speaking with you and thank you so much for taking out the time. I'll start by asking you the first question. The starking difference for me was that both of these have a very different approach when it comes to their cash levels. While one is, invested with most of its money, the other one is almost sitting on a 13% of cash. Just want to get a sense of, as to what is the different strategies for both of these funds, because a lot of investors right now are, enthused about both of these new small cap names on the street.
Yes, I think it's an interesting mix of comparing these two names.
Yeah.
From a hindsight perspective, both of them are newer AMCs. Both of them have launched their small cap fund in the recent past. In fact, Abacus is a lot more newer than even Helios is. Helios was in November of 2025 and Abacus started in March of 2026. Now, both the fund sizes are also very similar, but that's where the similarity ends and the dispersion of both of them being unique begins. So in this comparative study, I don't think we should figure out what are the challenges, but we should figure out what are the great opportunities that investors can look out for. To begin with, Abacus is a slightly concentrated portfolio compared to Helios. Helios is a little more broad-based. I mean, Abacus has got a little over 60 stocks, whereas Helios has got over 80 stocks. Now, clearly shows that Abacus is going for the concentrated bet, cash holding, and interestingly, a small percentage even in large cap. Whereas in Helios, you've got a broad list of securities, a little more broader expression in weight, and no large cap exposure. So clearly, you're seeing that Helios is going active elimination, which is largely their style, and Abacus is going for active selection and conviction, which is also their unique style.
Got it. Interesting. So one is more aggressive than the other is how you can put it. Both of these funds, like you mentioned, right, are at a very early stage, right? And they've not seen a full market cycle. So if somebody is kind of evaluating